banking frauds and case studies.
Welcome to all the members to the virtual webinar on banking frauds and case studies organized by Digital Accounting and Assurance Board ICAI. आज हमारे बीच में एमिनेंट फैकल्टीज हैं जो इस टॉपिक के ऊपर बोलेंगे। हमारे बीच में रायपुर ब्रांच के चेयरमैन सीए अमिताभ दुबे जी भी आज मौजूद हैं। सर, मैं आपको वेलकम करता हूं इस वेबिनार में। आप सन 2000 में सीए पास आउट हुए। यू आर पार्टनर इन संवेद एंड एसोसिएट्स। आप स्पेशलाइज्ड हैं गवर्नमेंट ऑडिट में। आप अभी एमसीएम के करंट में चेयरमैन हैं रायपुर ब्रांच के। आप पूर्व में वाइस चेयरमैन और सिकासा चेयरमैन भी रह चुके हैं। आप एमसीएस ओटीसी फैकल्टी भी लगभग 7-8 साल से हैं। आप फर्स्ट नेशनल ट्रेनर बने जेसीआई में और ग्रीन आर्मी के आप सेकंड फाउंडर हैं। सर, मैं आपका बहुत बहुत स्वागत करता हूं आईसीआई के इस वर्चुअल वेबिनार में बैंकिंग फ्रॉड्स एंड केस स्टडीज, और मैं आपको निमंत्रण देना चाहता हूं की नोट एड्रेस के लिए। सर
हेलो, थैंक यू विभोर जी।
जी सर,
मेरी आवाज क्लियर है?
बिल्कुल।
सबसे पहले तो आज रायपुर ब्रांच को सौभाग्य मिला है इस प्रोग्राम में जुड़ने का, जिसके लिए मैं पूरी कमेटी, पूरे बोर्ड के लोगों का आभार व्यक्त करता हूं। आज के प्रोग्राम में आज सबसे बड़ी बात रायपुर ब्रांच के लिए एक और भी है कि हमने ब्रांच की लैंड 1.25 एकड़ परचेस करी है, जिसके लिए आप सबको बधाई। इस कमेटी के हमारे सीनियर नंदा साहब जो कुछ दिन पहले रायपुर ब्रांच हमारे से मिलने यहाँ पे आशीर्वाद देने हम सबको आए थे, मैं आपका भी स्वागत करता हूँ। आदरणीय दयानिया सर, वाइस चेयरमैन, आपका भी मैं स्वागत करता हूँ। आज एक ऐसे टॉपिक को लेकर इस प्रोग्राम का आयोजन किया जा रहा है जो हम सीए के लिए बहुत ही इंपॉर्टेंट है, और वो है कि बैंक फ्रॉड्स। माय डियर फ्रेंड, आज जब हम बैंक में ऑडिट की बात करते हैं या किसी भी ऑडिट की बात करते हैं तो सीए की पोजीशन उसमें बिल्कुल तलवार के नोक पे चलने वाली बात होती है। एक बहुत बड़ी रिस्पॉन्सिबिलिटी हमारी होती है, और अगर इस रिस्पॉन्सिबिलिटी को फुलफिल करना है तो हमें हर करंट इशू पे, हर नए इशू पे अपडेट होने की बहुत ज्यादा जरूरत है। आज इन्हीं बातों को लेकर आज इस प्रोग्राम का आयोजन किया जा रहा है। मैं रायपुर ब्रांच के चेयरमैन होने के नाते आप सबका बहुत बहुत स्वागत करता हूं। फैकल्टी की पूरी टीम को स्वागत करता हूं और बधाई भी देता हूं कि आप आज के इस ऐसे इंपॉर्टेंट टॉपिक में अपने स्पीचेस को सब लेकर, अपने एक्सपीरियंस को लेकर आज हमारे बीच में उपस्थित हुए हैं। एक बार फिर से मैं आप सबका वेलकम करता हूं और पुनः आप सबको बधाई भी देता हूं। इंस्टीट्यूट की टीम को बधाई देता हूं कि आज के दिन में रायपुर ब्रांच ने अपना एक जमीन परचेस किया। थैंक यू।
थैंक यू वेरी मच अमिताभ सर, आपने अपना इनसाइट पेश किया। और मैं आज सबको बता देना चाहता हूं हमारे बीच में सीए नंदा सर भी और दयानिवास शर्मा दोनों उपस्थित होने वाले थे इस वेबिनार के लिए। किसी कारणवश उनकी फ्लाइट डिले हो गई तो वो फ्लाइट में है, जिसके कारण वो अभी इस समय वेबिनार में मौजूद नहीं है। तो हम लोग इस श्रृंखला को आगे बढ़ाते हैं और हमारे बीच में एमिनेंट फैकल्टी सीए लोकेश गुप्ता जी मौजूद है। सर, मैं आपका बहुत स्वागत करता हूं इस वेबिनार के लिए, और उनका एक ब्रीफ प्रोफाइल मैं आप सभी के सामने में पढ़ना चाहता हूं। ये सीए लोकेश गुप्ता जी हैज आल्सो डन एलएलबी फ्रॉम दिल्ली यूनिवर्सिटी इन द ईयर 2001. He has also done DISA ICI with first rank in India, FAFD ICI in 2018. He is currently partner of Shyam S. Gupta and Company. इनका वास्ट एक्सपीरियंस है over 20 years of bank branch statutory audit, concurrent audit, stock audit, internal audits of bank in public and private space, of experience more than 16 years. ये स्पेशलाइज्ड यूनिट इन बैंक सच एज करेंसी चेस्ट की भी ऑडिट कर चुके हैं। सर को बहुत अच्छा एक्सपीरियंस है जो एजेंसीज इन्वॉल्व होती हैं बैंक में, एटीएम्स वगैरह, उनकी ऑडिट करने के लिए। सर ने बहुत टॉपिक्स के ऊपर अपना व्यक्तित्व रखा है, चाहे वो फेमा हो, चाहे वो एफसीआरए हो, इंटरनेशनल टैक्सेशन हो या फॉरेक्स मैटर्स हो। सर ट्रेनिंग भी देते हैं ऑपरेशनल एरियाज में फॉर टू बैंक स्टाफ। Sir was a member on a group of certification course on concurrent audit of bank under IASB. He has contributed as member of group for revision of manual of statutory audit of bank for the year 2021 under AASB. Presently, sir concurrent audit के certification course के faculty भी हैं। सर, मैं आपका स्वागत करता हूं और आपको हैंड ओवर करता हूं for the deliberation on banking frauds and case studies. Over to you, sir.
Thank you, Vibhorji, and thank you, Dab, for inviting me here on this deliberation on a very pertinent topic of bank frauds and areas relating to bank audit. Now, this is an area which sometimes really concerns us as an auditor. Why? Because the bank management feels that it is the duty of the bank auditor, the branch auditor. He may be a concurrent auditor, of course. So the duty becomes more onerous. And of course, even otherwise, as a statutory auditor or doing a forensic audit or maybe doing a stock audit or maybe doing a number of audits which the bank asks a chartered accountant to do. So of course, it provides us an opportunity, but the onerous duty which is cast upon us by the branch, by the bank, basically is that they expect us to find out frauds if there are any, or to basically point out to any circumstances which may result into a fraud, any uh, issues in the internal control systems, any areas where you feel any weaknesses are there which may result into some kind of a loss to the bank or some kind of a fraud in the bank. So that duty is a very onerous duty which is basically cast upon us. And of course, we have seen over the years what has happened is that even in cases where there were frauds in the branches and they were concurrent auditors, they were getting penalized, even when they felt, the auditors felt that they were not actually responsible or to trace out that kind of frauds which were actually happening. And of course, if we look at the banking structure, so the banking structure actually works on the concept of maker and checker, basically. So, especially the frauds where the internal staff of the bank is involved in the frauds, that kind of frauds actually become very difficult to detect. And in case it is even detected, it is become it is very easy to actually do a fraud when two insiders are practically involved in the fraud, and especially if any of them is a senior member of that branch. So really poses a challenge to the auditors also sometimes, that they have to actually be very careful, extra careful while doing audits at the bank branches. And of course, becomes more onerous or more responsible when they are involved with the internal audits of the bank, whether as a concurrent auditor or otherwise. So a very important topic. I'll try from my side to basically bring out the guidelines which are applicable to frauds in the Indian context. What are the guidelines of the Reserve Bank of India in relation to the banking frauds that we need to understand? So there is a master circular of the Reserve Bank of India on these issues. So we'll understand the guidelines of that circular. We'll also understand the Indian present context in relation to frauds, and we'll try and then pick up certain cases on banking frauds. Of course, I have a very learned co-speaker who is still to join, but of course, he'll be covering the area related to Forex and trade finance, and I'll be covering the other areas basically in relation to the banking frauds. So, without wasting time, let me just start with my deliberations on the topic. Now, when I look at it, so when I look at this area, banking frauds, now it is not a recent origin. Can you just confirm, if somebody can confirm whether the PPT is running, whether we can see the PPT?
Yes, sir, the PPT is running.
Right. Okay. So frauds, when we talk about frauds per se, so frauds is not of a recent origin. Actually, it has been in existence for a very, very long time. And Kautilya, even in his book written in 300 BC, talked about frauds. So it is of wherever there is a amount, something which is somebody desires, and he is not able to get it through a straight means. We sometimes try to get it around. Not everyone, but sometimes people do get into that habit of trying to get things with a straight way or going around the thing. So the frauds, the existence of frauds have been there for a very, very long time. Now, if you look at the definition of fraud, though there would be very different definition, but this is what comes from RBI. Basically, it says a deliberate act of omission or commission. So it has to be a deliberate act. So if it is not deliberate, then of course there may be a mistake. It might be considered as a mistake, but it cannot be considered as a fraud. So mens rea, which is part of our criminal judicial system, is there. So deliberate act of commission or omission by any person carried out in the course of a banking transaction or in the books of account maintained manually or under computer system in banks, resulting into wrongful gain to any person for a temporary period or otherwise, with or without any monetary loss to the bank. So the important point is deliberate. It has to be a deliberate act. It should result into a wrongful gain to any person, even if it is for a temporary period, and it may not result into a loss to the bank. So the loss may be to a directly to a customer of a bank. Bank may not be at loss, but still because it is a deliberate act to basically gain to get a wrongful gain. Basically, it would be amounting to a fraud. So that becomes important. And this is where why I pointed out this specifically here is that sometimes bank might tell you as an auditor that because the bank is not suffering any loss, it may not be classified as a fraud, which is, if you look at the definition here, it is very evidently clear that even if there is no loss to the bank per se, then also it might be classified as a fraud. Now, if we look at there was a Norton report in 2013. It said India ranks amongst the top 5 countries in terms of number of cybercrime incidents such as ransomware, identity theft, and phishing attacks. So this is one of a very, very concerning factor, and this is something which now we are seeing practically. 2013, we might not have realized the problem associated with these kind of ransomware attacks and identity thefts and phishing attacks. But now every one of us who have a banking account, who may be doing internet banking, who may be doing online transactions, are actually seeing or may have suffered sometimes some kind of a fraud attempted on us, or they were even successful in doing some kind of a fraud against us. So this is something which is of concern. And of course, one of the reasons I find is that some of our investigating agencies are not properly equipped to handle such kind of fraudulent transactions. So that may be one of the factors which is affecting the growth of these kind of frauds in India. Now, if we look at analysis of fraud cases, this is again coming from the Reserve Bank of India. If you see, the number of fraud cases have been declining over the years, but the amount has been increasing. So again, one of the matters of concern for the RBI and of course the banks here. Now, again, if you look at the Indian context, why banks seem to be so much concerned about frauds is that the maximum frauds happening in the corporate sector. So banks is one part of that corporate sector. The maximum frauds is happening in the banking side. So that becomes a concern. Again, this is a data which has come from the Reserve Bank of India, and it basically shows the distribution of frauds amongst the various categories of banks, like public sector banks, private sector banks, foreign banks, financial institutions, small finance banks, payment banks, and local area banks. So if you actually see, of course, so public sector banks and private sector banks has the largest share of the frauds, because of course they are doing the maximum banking also. But if you actually look, the main factor here is that if you look from 2018-19 to 2021, if you actually see, the number of fraud cases in public sector banks have been declining. Of course, the amount has gone up, but it's still declining. But if you look at the private sector banks, there, if you see, the not only the number of frauds are increasing, the amount have gone up substantially. So this is one of the factors here which we need to see. And of course, it also somehow reflects the increasingly the increased role of private sector banks in the banking sector. So they have been growing very fast when compared to public sector banks. And of course, that has also resulted into a large number of frauds happening at their branches also. So this is a factor which, when we are auditing a private sector bank, we need to keep in mind. Then fraud areas, if you look at the area-wise distribution of frauds, and of course advances being the highest contributor to the frauds. But again, if you look at the frauds, of course, advances, still, if you look at the amount, nearly 99% of the frauds are happening in the advance area only. But of course, over the years, if you again see the area of cards and internet banking, which have been growing, has resulted into an increased number of fraud cases, though the amount substantially remains on a lower side only. But the number of cases, if you see, has gone up substantially. So from a share of only 27%, they have gone up to nearly 35% of the frauds reported relates to cards and internet. So one of the new areas where we are seeing a lot of frauds happening, and people are increasingly finding it difficult to be able to distinguish between a genuine request from a bank maybe or from a fraudulent request. So this is one of the areas which is of course one of the most concerning areas for banking industry as a whole. Now, what are the factors which are contributing to fraud? So there was an Indian banking fraud survey with Deloitte. One of the factors which they stated therein was lack of oversight by line managers, senior management on deviation from existing process. So there is a defined process, there was a deviation, and it was not basically controlled, or there was an oversight by the senior management. So this is one of the areas where, of course, the role of the auditors come into picture, is because we as an auditors do look at what are the existing processes and whether the work is being done as per the existing process or not. So this is one of the largest factor which has contributed to the frauds. Then, of course, business pressure to meet unreasonable targets, difficult business scenario being one of them. Then lack of tools to identify high risk patterns and transactions. So a lot of banks have now started doing some kind of an offsite analysis of the transaction to detect any unusual transactions, any high risk transaction, any transaction which may amount to a fraud. And of course, they are trying to control these practices. But of course, that needs to be further strengthened and improved going forward. Then collision between employees and external parties, new technologies and channels, change in business strategy without changing execution plan, etc. Now, if you look at detection of fraud, again, as per that survey, 20%, 21% cases, the highest, it is through customer complaint. So the person who has been defrauded comes to the bank, complains, and that has resulted into some kind of a detection of the fraud. And 18% each is shared by internal audits, accounts audit, reconciliation, and internal whistleblower anonymous complaints. So audit is still one of the largest contribution to detection of fraud. Nearly 18% of the cases, nearly 1/5 of the cases is been detected through the audit mechanism. So of course, and that is where I think not only the bank also need to equip the auditors with different tools, different reports, so that they are able to help them in preventing these kind of frauds. But also where the role of the auditors become important for the banking industry. And then some anti-fraud programs basically needs to be designed, and basically the anti-fraud program which a bank would design would basically comprise of three portions, which would be the preventive mechanism, one would be the detective mechanism, and then there would be a response mechanism. So then policies needs to be devised into each of these areas: preventive, detective, and response mechanisms, to be able to make a good program and try and bring out the best in preventing of frauds, and in case a fraud happens, in the earliest detection of the frauds. Then common issues in frauds, basically retail banking, if you see, it would be fraudulent documentation and overvaluation, absence of collateral, multiple funding, identity theft are most common in retail banking. Corporate banking, it is more in relation to diversion of funds, siphoning of funds, incorrect financial statements, and asset stripping are most of the common problems in case of corporate banking. Then private banking, it would be more in relation to identity theft and fraudulent documentation. So this is how are the factors. Then Bank frauds, basically, if I look at it, it can be divided into basically three areas. One is deposit related frauds, then there would be advance related frauds, and third would be the service related frauds. So we'll try and go into details of each of them. Now, RBI has divided frauds into various categories, and this categorization which they have done is basically based on the Indian Penal Code, and each of the category actually defines one of the different sections of the Indian Penal Code as to crimes. So it was misappropriation and criminal breach of trust can be one, and fraudulent encashment through forged instrument, manipulation of books of account or through fictitious accounts and conversion of property, cheating and forgery, unauthorized credit facilities extended for reward or for illegal gratifications, fraudulent encashment in foreign exchange transaction, negligence, then any other type of frauds. And if you see the D portion, it actually is very important for us to know why, because this portion is relating to cash shortage. Now, cash shortage, this portion has three independent portions within it. One is negligence and cash shortage if intention to cheat, defraud is suspected or proved. So this is very easy to understand. So say as an auditor, you find there is a cash shortage, and that cash shortage is due to intention to cheat or defraud the bank, and it is to be classified as a fraud. No doubt about it. This is something which is everybody would accept. Now, the second portion says there is a cash shortage exceeding rupees 10,000, including in ATM. Okay, it does not talk about intention. It does not talk about whether there is some employees involved or some third parties involved, and there is an intention issue there. It only talks about a fact, and that fact is that there is a cash shortage exceeding 10,000 rupees, including in ATM. If such a shortage exists, then it is to be reported as a fraud, irrespective of the fact whether there was an intention to cheat or defraud the bank or not. Mandatory reporting is there in cases where there is a cash shortage exceeding 10,000. Now, in case there is the cash shortage is exceeding 5,000 rupees and it was not reported on the previous day while closure of the cash by the persons who were handling cash. Say you visited the branch for a surprise check for cash verification, and as an auditor you find that there is a cash shortage of more than 5,000 rupees. Now, even if you feel there is no intention to cheat or defraud the bank, but the fact that there is a cash shortage of more than 5,000 rupees and it was not reported on the previous day by the persons who were handling cash would require it to be mandatorily reported as a fraud. No choice is given to the auditors or the bank management in doing anything else. Okay, so this is very important for us to know as an now, coverage of reporting, it covers foreign banks also. It covers foreign branches of Indian banks also, basically. Now, how the fraud reporting is to be done? So, bank sends a fraud monitoring return 1. We say that it is, in short, FMR 1 through an XBRL system which RBI has designed. So, and this reporting is done online only. Earlier, there was also a requirement of doing a hard copy of the report, which is now dispensed with. And a central fraud registry has been created by the Reserve Bank of India from 2016 onwards. It is a web-based and a searchable database. And this is actually one of the ways through which dissemination of information is being done through to all the banks as to various modus operandi and various kind of frauds which are happening across the banking industry. Okay. Now, filing of FMR, I told you, it is to be done within, it is to be done through that XBRL system. It is to be done within 3 weeks of detection of the fraud. So, whenever the bank detects the fraud, it gets 3 weeks to report the fraud. There is no minimum amount. A fraud of 100 rupees also needs to be reported. A fraud of 100 crores also needs to be reported. Any kind of fraud, any amount of fraud needs to be reported online through this XBRL system. The hard copy I told you is dispensed with. Now it is only a monthly certificate which has to be given that they have reported all the frauds to the RBI. Now, in case the fraud is amounting to more than 5 crore rupees, then in that case, RBI considered this as a large fraud, more concern basically for the RBI. So, in addition to the normal requirement, which is FMR1 within 3 weeks of detection of the fraud, they have to additionally do a fraud flash report, we say, within 1 week of the detection of the fraud. So within 1 week, you have to do a fraud flash report, and then within 3 weeks, you have to also file the FMR1 report to the RBI. Then whatever updates are happening in that, so the bank would continue to investigate. So whatever updates are happening in that fraud, you have to keep on updating that report which you have filed online through that XBRL system. You have to keep on updating that through that XBRL system itself. Timely reporting of fraud, why it is so important for the banking industry? One, they say that in case you delay reporting of the fraud, one bank delays reporting of the fraud, the fraudster gets a chance to do that kind of a same fraud with some other bank also. So sharing of information helps all the banks so that they can take the necessary steps, necessary precautions, so that a similar fraud may not happen at their branches. But of course, this is something which is kind of a moral obligation on the banks, but RBI does not stop at it. So RBI also says that in case the reporting is not done within the time frame fixed for reporting of the fraud cases, which is 3 weeks of detection of the fraud in FMR1 format, then the banks can actually be penalized by the RBI under Section 47 capital A of the Banking Regulation Act 1949. And we have seen in past a lot of cases where banks were penalized for delay in reporting of fraud cases or non-reporting of fraud cases. So it becomes a very important step. Then also further to disincentivize delay in reporting of the fraud, in case there is a fraud in a borrower account, then as per the IRAC norms applicable, the provision of 100% is to be done, ignoring the existence of any security on the borrower account. But they gave an option that if you do a reporting of the fraud on a timely fashion, that 100% provision may be done spread over a 4-quarter period. So bank gets a choice of basically doing that provision of 100% over the 4 quarters rather than doing it in the first day itself. But in case they delay reporting of the fraud, then the complete provision has to be done on the day one itself. Okay, so this becomes important. Now, cases of attempted fraud need not be reported to Reserve Bank of India, but they can be discussed in the audit committee of the board. Okay. Then reporting of fraud by the auditors. Again, this is an area which is very important, which concerns us as an auditor on a very straight way, which is basically that till now we discuss about the cases where the reporting of the frauds is to be done by the bank. And we were looking at the compliance of the reporting requirement by the bank. Now, this is an area where the reporting of the fraud is to be done by the auditors itself. And the auditors have to directly report these frauds. And in case there is a delay or there is non-reporting of these frauds, then the auditor itself is becoming liable for action. Okay. Now look at these two paragraphs which are there. To specifically report simultaneously to the Chief Executive Officer of the bank and Central Office of the Department of Banking Supervision, RBI Mumbai, any matters susceptible to be fraud or fraudulent activity or on any foul play in any transactions. Any deliberate failure on the part of the auditor render himself liable for action. So here the reporting is to be done by the auditor. It has to be done to the Chief Executive Officer of the bank and the Central Office of the Department of Banking Supervision, division, RBI Mumbai. And in case it is not so done, then the auditor becomes liable for action. So this again becomes a very, very concerning area for us auditor. Okay. And further on it says, only instances of fraud or fraudulent activity if the amount is rupees 100 lakhs or above should be reported to the Reserve Bank of India, Department of Banking Supervision, Central Office Mumbai, and all other instances should be reported to the regional office of the RBI DBS under whose jurisdiction the head office of the bank falls. So this is basically telling you where the reporting to the RBI is to be done, which is based upon the quantum of the fraud. But in any case, the fraud reporting has to be done by the auditors. And these paragraphs, these two paragraphs, if you ask me, sir, a lot of times we actually do not go through the appointment letter, the terms and conditions given in that appointment letter. But these two paragraphs are required to be included in every appointment letter issued to an auditor, whether as a concurrent auditor, stock auditor, or statutory auditor, or otherwise, because there is a mandatory requirement of the Reserve Bank of India directing the banks to basically use these two paragraphs in every such appointment. So this casts an onerous duty upon us as an auditor, and we should be aware of and should discharge our duty to the best of our ability. Now, the closure process is also done. So any fraud which is so reported becomes open in the books of RBI, and unless until it is actually reported, it becomes part of the open fraud cases with the bank, and the RBI needs a closure of the fraud cases. So what are the steps before the fraud can be closed? It is that the fraud case needs to be finally disposed of, staff accountability has been completed, amount of fraud has been recovered or written off, insurance claim has been settled. So this is basically the steps which are required before closure of a fraud case. And then there is a specific reporting requirements to police and CBI in fraud cases. So it says that in case of private sector banks and foreign banks, all the reporting of frauds is to be done to the local police only. Cases of fraud of 1 lakh and above done by outsiders with or without the connivance of the internal staff needs to be reported to police. In case the fraud has been done by the internal staff, then in any amount of 10,000 and above would require reporting to the police. And in case the fraud is of 1 crore and above, apart from the reporting to the local police, you have to also report the case to the Serious Fraud Investigation Office, Ministry of Corporate Affairs, Government of India, New Delhi. Okay, so this is an additional requirement in such cases. In case of public sector bank, they say that any fraud of 3 crores and above needs to be reported to CBI and not the local police. And then it divides it into cases involving frauds of 3 crores and about 25 crores, up to 25 crores, where staff involvement is prima facie not evident, CBI economic offences wing, where staff involvement is prima facie evident, then CBI anti-corruption branch. And then any fraud of amount exceeding 25 crore and up to 50 crores needs to be reported to Banking Security and Fraud Cell of the CBI, which is a specialized cell of CBI. And any fraud of more than 50 crore needs to be reported to Joint Director Policy, CBI Headquarters, New Delhi. And fraud amounting to less than 3 crore rupees needs to be reported to local police. 1 lakh and above, state CID economic offences wing of this local police. 10,000 to 1 lakh, local police station. Less than 10,000, regional head would take a call whether reporting to the police is required or not. Okay, so these are the reporting requirements. So one, you have to report to the RBI. Secondly, you may be required to be reporting to CBI or police authorities, whatever may be the case. And the bank needs to discharge its duties of doing that reporting. Now, cases of theft, burglary, dacoities, and bank robberies. Though, if you ask me, these do not amount to frauds. These are criminal offences which per se we do not say as fraud, but these are criminal offenses, and they also need to be reported first at the first instance when any such event might have happened. Then you have to report it immediately through fax or email to these five authorities. And there is a quarterly return which needs to be filed every quarter at the end of the quarter, XBRL system, and even a nil report is mandatory. So these are the issues. Now, check-related frauds. So RBI has also in its master circular given out certain advisories as to what needs to be done by the banks as a good policy, so that to prevent these kind of frauds from happening. These are not mandatory as of now, but banks are expected to gradually follow them and incorporate them in their systems. One such system is sending an SMS alert to payer drawer when the checks are received and clearing. So you will see a lot of banks have started doing it. Then examination under UV for checks beyond a certain threshold which the bank might decide. So you'll find a lot of banks have started doing it. Then checking customer calling and confirmation. Again, this is something which has a lot of banks have started doing customer calling and confirmation. So I welcome Soma Shekharji, my fellow speaker and a very learned person.
Yeah, good evening. Good evening, Lokesh. Go ahead.
So customer calling and confirmation is something which we have seen now. A lot of banks have started doing, and it is actually very helpful from the banking perspective in preventing these type of check-related frauds. And of course, now we have seen a system which has emerged very recently, which is basically in relation to positive pay system, wherein you actually pre-inform the bank through a system which they would have devised as to what kind of checks you have issued. So this is one of those steps which have been taken by the Reserve Bank to ensure that the minimization of basically check-related frauds in the banking industry. Then basically there's also a framework of non-related frauds. This actually came as part of a separate circular in 2015, but then thereafter they included it as part of their master circular itself. And this is something which a lot of us would be already aware of, because this is now part of the revised LFAR format also, which we have to fill as a statutory auditors at the branch level. So it talks about red flagged accounts and it talks about early warning signals basically. And this concept of red flag accounts is applicable of exposure of 50 crores or more at the level of a bank. Only in those cases this concept is applicable. What is this concept of red flagging and early warning signals? So basically RBI has given a list of early warning signals which they believe indicates a possibility of some kind of a wrongdoing or some kind of fraud in a borrower. Of course, a single factor may not be able to decide it. Multiple factors might give you an indicator. So they are given a list of early warning signals. Now, what is the process? Basically, what they have defined is that in cases of account where you find any such early warning signals in any account, then this fact that there is a early warning signals in any of the borrower account needs to be reported to the fraud monitoring group of the bank, which would then see and confirm that there is a early warning signal in the account, borrower account basically. In case they feel there is an early warning signal, they may report it as a red flagged account in a system called as CRILC platform, which is an interbank platform controlled by the Reserve Bank of India. So they report it there as a red flag account. Now, when they red flag the account, they do not say the account is a fraudulent account. They only say that there are circumstances, there are warning signals which exist in the account, and it may or may not be a fraud, but we are red flagging the account. Now, the advantage of such a red flagging is not only the bank which has noticed the early warning signals, but the other banks which may have exposure to the borrower would be put to notice that there is some problem in the account, and they can be more careful while dealing with that customer. And then there is a process which has been defined in that circular as to within what period the investigation needs to be done, and the final outcome needs to be decided as to what kind of an issue, whether the account is a fraudulent account or is not a fraudulent account. If the account is decided to be a fraudulent account, then of course it would be removed from red flag status, and it would be transferred to the fraudulent account category. And in case the account is deemed not a fraudulent account, then it may be removed from the red flag status. So this is something which basically RBI has designed for the purpose of kind of early warning signals for the banks, basically, as to any kind of fraudulent activity happening in the any such account. Now, of course, legal audit of title deeds also came out through the RBI circular on frauds, and we said that any credit exposure of 5 crore and above would require legal audit and re-verification of the title deeds with the relevant authorities. So this concept actually emerged from this RBI circular also. So a very important point when we are looking at the credit exposure of a bank, and whether they are actually whether they have a system of doing a periodic legal audit and re-verification of title deeds. In case the system is there, sometimes the system is there, the policy is there, but it has not been actually practically implemented. So maybe a very necessary issue to be pointed out to your audit report. Now, some case studies on frauds. I thought of including some of the case studies which I came across for the purpose of your knowledge and action. Now, advances in relation to whether property was being taken as a security, whether as a primary security or a collateral security. So what we saw was a large number of frauds happening in the banking industry in relation to such kind of properties where they were equitable mortgage to different banks at the same point of time by maybe colored photocopy of the title deeds, basically. So in case of equitable mortgage, when we go for a search report, it will not give you an indicator as to any charge of any bank or any person on that property. The reason being because the equitable mortgage is not registered with the relevant authorities. Now, this resulted into a lot of customers actually going in for doing colored photocopy of the title deeds and submitting to different banks at this, and then obtaining loans against these properties, which was at one point in time was a serious issue for the banking industry. Then, of course, to take care of it, government came out with a registry, online registry, which we known as CERSAI, basically, and it started off with the basically registration of charges where equitable mortgage has been created on any property. And now, of course, the basic framework of CERSAI has increased over the years. And now any security, any charge created, whether on an immovable property or a movable asset or even goodwill or even under construction property would require registration of charge under CERSAI. So this issue has been taken care of to a great extent by this introduction of CERSAI. Of course, when we look at CERSAI, very important again as an auditor to not only look at whether the charge has been created under CERSAI, also to look whether the charge has been correctly created. So it may be a case like I'll give you an example as to why I'm specifically talking about correct creation of charge in the CERSAI. Suppose there is a property, flat number 301, on which a charge is to be created. But at the time of feeding that charge into the system, somehow it was fed as, in place of 301, say it was fed as 31. Now 31 may not be any flat within that complex, but still a charge would be created because the property does not exist in the database of CERSAI. So CERSAI database does not have a list of properties from which you pick up. So CERSAI database basically checks whether the property for which a charge is being proposed to be created exists in the system or not, in their internal database or not. So 31 may not be a property in existence, but still a charge would be created. and 301, which is the actual property number, the charge may be missed out. So it becomes very critical for us as an auditor to not only look at the creation of the charge per se, but also to look at the correct creation of the charge there, right? So very important step. So in the initial phase, in case of CERSAI, once a charge was filed with the online or to the relevant authority, only a number used to be created, and the bank used to say that we are not able to show you the form which has been filed. Now their form is available and you can actually verify it as an auditor. So my humble request to all the auditors, which are basically verifying property documents, maybe loans where property has been taken, mortgage has been created on it. Basically, not only look at the creation of the CERSAI charge, but also look at the correctness of the creation. Then builder property documents submitted. This was again a problem even after introduction of CERSAI. What was the problem basically was that in case of under construction properties, bank does a tripartite agreement between the builder, the borrower, and the bank. The property itself is not in existence, so you cannot create an equitable mortgage on something which is not in existence. The property is under construction. Again, to take care of such issues where multiple financing was done. So there was one instance which I can point out, which we saw, wherein one of the builders, what he did was, so he was building a complex. The flat, there were around 500 flats in the complex. He sold these 500 flat to multiple buyers. So a single flat, say flat number 301 was sold to Mr. A also and Mr. B also. And in certain cases, Mr. C also. So were sold to multiple buyers and they were getting it financed from different banks. Now, this was again because here the biggest issue was that there was no equitable mortgage also. So the CERSAI even was not helping. Now, the guidelines have been amended to take care of it, that such agreements where there is an under construction property also needs to be registered under CERSAI. So this is something which would help in controlling such kind of issues where attempted frauds against the banking industry by these holders. Okay, then advances in relation to jewelry sector. So one of the biggest frauds we saw in the banking industry, where still the issue is going on relating to Mr. Nirav Modi, is in relation to the jewelry sector. Of course, it was relating more to the buyer's credit side, which we have a very learned person, Mr. Somashekar, would be basically dealing into it. But of course, jewelry sector again poses one of the risks for the banking industry, because sometimes the goods can be passed on as original, which may not be the actual case. So inflated value of diamond. So again, diamond is something which valuation becomes very subjective, and sometimes even the stock auditors or even the persons who are visiting the branch management is not able to detect whether the stock which is being shown really represent that value which the borrower claims. Then export bills remaining unpaid purchased by consortium banks, for which the reason given was financial difficulty of foreign buyers. Detail of receivables that are submitted appear to be manipulated or fabricated. Pre-shipment availed from one bank and post-shipment from other bank. So this is again one of the issues where it needs to be very careful, that it may result into a double financing, that you have already availed a finance of pre-shipment from some bank and you have availed a post-shipment from some other bank. So it needs to be very careful in this. Then pre-shipment credit availed as SBLC instead of packing credit loans. This is again something which is of concern. Then use of related party transactions to siphon or divert the fund due to absence of due diligence on foreign buyers. Though this again was an issue which was pointed out later in case of Nirav Modi also, that they were related parties and there were circular transactions, especially in diamonds, where the inflated value of diamonds was somehow exported and then returned back and then again got inflated and then re-export happened. So these are some of the issues, especially when it comes to the jewelry sector. Then advances in manufacturing sector, basically export bill discounted against shipping bill submitted to banks. Then on verification, the shipping bill submitted were found to be forged. So this was one of the cases where a large amount of shipping bills were submitted and which were found to be false. Of course, now these can be taken care by there is a new system which is already in place from 2014, which is EDPMS, Export Data Processing and Monitoring System, which would actually help in bank in detecting such kind of fraudulent submission of shipping bills. Then invoice had no indicators of any code, grade, mark, etc. Fictitious transport operators were used, any documents were forged. Goods sold to a firm on merchant export basis which were dealing in electrical appliances and had purchased from firm dealing in computer components. So in case of especially of imports, one of the major areas we tell any auditor which is doing any kind of verification is that we need to be careful about the country from which the goods are being procured or where the goods are being sold, and the persons from which whom the dealing is happening, whether they actually are dealing into these kind of items or not. So that becomes very critical in case of loans given to the manufacturing sector. Then advances housing loan, basically overvaluation of the property. This is one of the most common. So where the banks have started doing multiple valuation of property beyond a certain limit. So that is one of the areas where we generally you'll find a concern. Then collision of valuers with borrowers, which would result into some kind of a overvaluation. Then wrong legal scrutiny reports or incorrect land records or chain documents. So this is again what we have seen is that the scrutiny reports, legal reports which are obtained do not correctly reflect or do not correctly state the requirement or documents, whether they are correctly stating the whether it is a leasehold property, it is a freehold property, whether a charge can be created or not. Then double mortgage, project loan, and housing loan. This can be one. Incorrect employment detail of fake employer. Fraudulent income tax return. Again, this is one of the cases where banks have started doing some kind of a re-verification of these income tax returns, etc. So a lot of times I have seen my customers requesting me, my clients requesting that, sir, please help us in getting these returns verified through our online income tax websites. So this is where the banks have started doing some kind of a verification. So when we are doing audits as an auditor, we need to verify what is the process being employed by the bank to ensure the verification. And in case there is no such process which exists, then it put not only the bank at risk, but we as an auditor also are at risk of having accepted. The bank might have accepted some fraudulent documents, and we may have not, we may have failed to detect any such fraudulent documents also. And duplicate PAN card, disbursing loan without taking search, fabrication of income certificate, balance sheet, etc. Escalation of overall cost of the prop to obtain higher loan. So these are some of the issues which we have commonly seen in case of housing loans. Then jewel loans. Again, this is one area where again we have seen a lot of frauds happening in the industry. So one of the most common being one is passing of fake gold as genuine by the by borrower in connivance with the appraiser. So this is one of the most common. So there is a connivance between the appraiser and the borrower, and fake gold ornaments were passed as valuables and loan obtained, and then of course the customer disappeared because he didn't wanted to do anything with the ornaments. Then depositing stolen goods in the bank and obtaining loans. So this is one of the challenges with jewelry, basically, because the ownership per se cannot be proved. So the person who comes with the jewelry is deemed to be the owner of the jewelry, and stolen goods have been disposed of by taking loan against them in the bank. Then double financing of the same gold loan packet. So this is also happening. Overvaluation to draw excess bank finance. Again, the carat, the valuation with the maybe with the connivance of the appraiser. So maybe a 14 carat gold jewelry was passed off as 22 carats. So which resulted into some kind of overvaluation. Then gold returned to borrower and finance continued. So we have seen cases where gold was returned to the borrower, but the account was not closed, and he continued to enjoy the loans basically. One more issue which we generally see in case of jewelry loans are, of course, it is more relating to NPA sector, NPA side, which is where to settle the earlier loan, a new loan is given to on the basis of the same gold packets, and the loan amount is dispersed to the account of the customer, from where the credit is basically that credit is utilized for the repayment of the earlier gold. So against a single gold packet, at one point of time, double financing is being done by the banks to ensure the account does not slip into NPA category. So this can be also one of the concerns as an auditor when it comes to jewel loans. Then identity theft frauds, phishing links. So these are some of the new types of frauds in the technology side which has emerged, and which is actually causing some kind of a concern for the bank, for the auditors, and for the banks, and for the customers. So one of the ways through which they are doing is fraudsters create a third-party phishing website which looks like an existing genuine website, like a bank's website. So sometimes we actually advise people that please do not go and Google and search your bank's internet banking website through the Google links, because you may be directed to a phishing link basically. And that phishing link basically, the intention is to ask you for your credentials and capture those credentials and use it for the purpose of doing a fraudulent transaction. So link to these websites are circulated by a fraudster through short messaging services, social media, email, instant messages, etc. And now if you see those links also, they very, very closely resemble the links of the original website. And sometimes people do not look at the addresses, or when they look at the addresses, they miss out on the slight change which the fraudster might have done while creating that website. And then customers click on the link without checking the detailed uniform resource reporters. On the top of it, you see the URL basically, and enter secure credentials such as personal identification number, OTPs, password, etc., which are captured and used by the fraudsters. Then identity theft fraud, phishing calls. Again, this is something which I'm sure most of us would have actually faced one time or the another. So imposters call or approach the customer through telephone call, social media posing as bankers, company executives, insurance agent, government official, etc., to gain confidence, and then few of the customer details such as customer name, date of birth, etc., are shared. In some cases, imposter pressurize the customer into sharing confidential details such as passwords, OTPs, PIN, cards, verification value. By citing an emergency such as need to block an unauthorized transaction, payment required to stop some penalty, and attractive discount, etc. Very recently, I got a call that your points are, your credit card points are basically expiring. So you need to click on this link and do something to so that the links, your points do not expire. The funniest part was that I do not hold the credit card of the company for which my points were expiring. So a lot of times these issues that we are seeing, sometimes they call up, tell you that your account would get blocked because you have not done your re-KYC, you have not done this, you have not done that, and customers do come under pressure and share sometimes sensitive information, thinking that they are dealing with a banking executive, wherein actually they are actually fraudsters basically trying to compromise your important data. Then identity theft, fraud online sales platform. So fraudsters pretend to be buyers on online sales platform and show interest in sellers' product. So you must have heard of cases where somebody was selling something on an online platform, and somebody told them that they are interested in buying it, and then asked them to click on a link basically so that the payment can be done, and which resulted into some kind of fraud to the person who was selling the product itself. So this is something which is very, very important, and again, which we may have faced ourselves, or we may have heard somebody close facing some kind of an issue. Then identity theft fraud apps basically. So fraudsters circulate through SMS, email, social media, instant messages, certain apps links must appear similar to the existing apps of authorized entities, like it may be related to banking entities, it may be related to some kind of financial entities. Then fraudster trick the customer to click on such links, which result to downloading unknown, unverified apps on the customer mobile, laptop, desktop, etc. And the once the malicious application is downloaded, the fraudsters gain complete access to the customer's device. Now, this is again, which is a very important point here, is that now a lot of times we are doing banking through our mobile phones. But when it comes to security of our laptops or desktops, we generally, a lot of people would actually buy some kind of antivirus software to basically control these kind of unauthorized or unknown application being downloaded, right? But in case of mobiles, though we are using it for so many purposes, including logging to our banking websites, etc., we do not use any kind of security in terms of antivirus software or things like that, which may actually help us in preventing a fraud from happening. So these are one of those cases. Then identity theft fraud cases through ATM card skimming. So you may have again heard of cases where the ATM machines, which were already installed by banks, some kind of a device was put on that ATM machines. When you look at it from a naked eye, you sometimes are not able to distinguish that there's some additional device which has been planted on those ATM machines. And these devices, skimming devices, basically put some kind of a either some kind of a keyhole camera kind of a thing, or they capture it through a dummy keypad, and they basically get the details of the customer, which may be used for creation of a duplicate card and withdrawal of money from the customer. Then remote access. This is again where we are using a lot of screen sharing apps, where it and other screen sharing apps, wherein we actually download these screen sharing apps, and it may be required for some kind of a genuine business requirement or some personal requirement, but these can be manipulated easily for the purpose of gaining control over your system and basically take the confidential information which may be stored in your system. So sometimes we feel that we do not store any confidential information, but a lot of times you see when we click on a banking website, when we click on a lot of websites, our system prompts us to save the password. So that all those passwords are getting saved somewhere in our system. You can actually go and check them also, right? So when these kind of screen sharing apps are used, which allows them to control your system, the access given can be misused for the purpose of gaining that confidential information. Then SIM swaps. I personally faced one of those cases where somebody called me and they were trying to do a SIM swap transaction kind of a thing. So basically, fraudster gain access to customer's SIM card or may obtain a duplicate SIM card for the registered mobile number connected to the customer bank account. And then, of course, once the OTP is received in the duplicate SIM, they basically go and use it for the fraudulent transaction. Now, of course, a lot of these mobile networks, what they have started doing is that in case you obtain a duplicate SIM of the existing number, this SMS service do not get activated for a period of 24 hours. This is just for the purpose of gaining time in case this swap is a fraudulent swap, that the person whose SIM has got swapped would get the opportunity of nearly a day before of reporting such a issue, so that no fraudulent transactions can be carried out through receipt of these OTPs, etc., in the duplicate SIM. Then we have transaction like search engines now. So customer using search engine to obtain contact details like customer care numbers of the bank, insurance company, Aadhaar and patient centers, etc. Now these numbers which are being obtained sometimes are not genuine numbers itself, and they require the number of they are basically numbers of fraudulent call centers, etc. And when the person calls up that number thinking that they may be talking to their bank or the insurance company, etc., they actually try and obtain the confidential information of the customer and use that for the purpose of basically defrauding the customer. Then we have identity theft through social media. Now, social media is something which is ubiquitous to every person right now. Everybody is using some kind of a social media platform such as Facebook or Instagram or Twitter, etc. Now, fraudster then send a request for the user's friend asking for money for urgent medical purposes, payments, etc. So this again, a lot of us would have faced with somebody calling you up or somebody requesting you through these social media or WhatsApp even. Recently, I received one of the messages on WhatsApp asking somebody close to me asking me for some payment. So I made it a point to call him on his office number and ask him. So he told me that his WhatsApp has been hacked. So we are seeing cases of WhatsApp hacking also, where you lose control over your own WhatsApp and somebody else is operating that WhatsApp. So these kind of things are happening, or these call centers, basically these media centers being used for basically taking the information from the customer. Sometimes what we are also seeing is some kind of attractive scheme being reflected that say a product of 10,000 rupees, you will get at 4,000 rupees on this site, and you go and click on it, and then it allows you to purchase that at 4,000 rupees, asking you for credit card details and all. Ultimately, they are not going to ship or anything, but ultimately they are going to, the intention is to obtain your credit card details and everything from you. Then juice jacking. This is something which is happening. A lot of time people are not aware of the concept. So now you see your charging port of a mobile can also be used for the transfer of files and data. Now, a lot of times we go to some public place like a mall or maybe an airport or maybe some public place where they are charging ports. Now we use these charging ports for the purpose of charging our phone, because everybody is actually concerned nowadays as to that his phone should be kept charged. And these actually charging ports then are used to basically they charging ports actually have a malware. Basically, when we install these phones, that wires in those ports, actually they place some kind of a uh, software inside the, through that link they establish some kind of a software within your phone, which is then used for basically taking out the sensitive data from your phones basically. So you are most advised not to use the charging infrastructure in public places unless until you actually rely upon them. Then lottery frauds. Again, this is something which we have been seeing for many years now. So fraudsters send you emails or phone calls that the customer has won a huge lottery. So I can tell you, I have received at least 4 or 5 cases where somebody approached us telling us that he has won a huge lottery and he is asking for some kind of payment which is would not be much in comparison to the lottery amount, which would be like maybe say something like 25,000 rupees or 50,000 rupees, which is basically the processing charges of or payment of taxes or courier charges. So they will have some kind of a story to tell, and the purpose is basically to obtain that money and not then again, of course, there is no lottery which has been won. And a lot of people actually fall prey to it, thinking that they are only taking a chance that the lottery amount may be running into like 70-80 crores and he's only paying like 25,000 rupees, thinking that I'm only taking a chance that if I may lose only 25,000 or 50,000 rupees, but if the transaction is genuine, then I stand to gain like something like 70-80 crores. But actually, a lot of times whenever I have come across such instance, somebody asking me about it, I only ask him one thing, that whether you have actually purchased a lottery ticket, which gives you that pin, which is he's claiming that you have won. So that actually just sometimes actually clicks in their mind that they have not done anything which actually entitles them to that lottery win basically. Then money mules. This is basically a concept in which some innocent victims' bank account have been misused for some kind of a money laundering or some kind of a fraudulent transaction. These persons whose accounts are being used are called as money mules, basically. So they are not the fraudsters themselves, but because the fraudsters need some kind of an account for the purpose of laundering the stolen or doing that fraud, they use these money mules basically. So they basically through these fraudulent transaction actually convince these person to share their details of their account, and through that sharing of information they actually misuse that account for the purpose of carrying out their nefarious designs. Then we have a case where fraud happened through misuse of BG facilities. Now, in case of this, fraud happened in Mumbai, and multiple banks got defrauded under it. So here what happened was there was a party, there was a borrower which was into large scale engineering and landscaping and civil construction work. And they were doing work in India, and they said they actually went to multiple banks telling them that they have got contract from some foreign parties, and as part of that contract, they would get some kind of a mobilization advance. And to receive that mobilization advance, they have to get some BG issues to the foreign parties. Now, this is some kind of standard practice in the industry in long-term construction contract, that the contractors do get mobilization advances, and against which bank guarantees are issued for the security of these mobilization advances. So multiple banks agreed to do it. So the purpose was that these bank guarantees which were issued were actually given to the foreign banks as security for obtaining loans. And against these loans which were obtained, the money was sent as mobilization advance to this fraudulent party in India, which this money was then again used as some kind of a promoter's contribution for further issue of BGs, and the circular transaction went on happening. And then later on, suddenly, the Indian party disappeared, and the foreign banks started to invoke BGs for the purpose of recovering the amount which has advanced to the borrower. So this fraud actually happened with multiple banks, and if I remember it correctly, the amount of the fraud was more than 1,000 crores here. So even misuse of BGs. So wherever we talk about some person actually trying to use some kind of a mechanism to defraud the bank or the some other person basically. So unauthorized debit to inoperative account. So this is one of the very concerning areas in case of bank. So inoperative accounts, basically those accounts which have not been operated but do have certain balances. So what happens is generally these will be some kind of an insider involvement here, wherein they would feel that they are aware of these kind of accounts which have money lying into it, but the customer are not coming to the bank to do any transactions. So there is a likelihood that somebody might think that the money can be taken out without anybody realizing that the money has been taken out from such an account. So we have a system of an inoperative account, wherein the account gets transferred to the inoperative or dormant status in case there is no transaction in the account for a certain period of time, right? And in case the account needs to be operated again by the customer, he has to approach the branch with maybe the KYC document, and an authorization from the bank management is required before the account can be again restarted. So please look at the number of cases where accounts have been modified from inoperative to operative status for the purpose of verification, so that such kind of frauds may be checked. Then fraud in car loan account. So in car loan account, generally there are two types of fraud which I can think of. One is that the money is given, but the loan, the car itself was not taken, and the money was somehow siphoned off by the fraudster, generally with the connivance of somebody in the the car dealers network. And second type of frauds which I have seen here is that the car somehow got sold uh, after taking the loan, and the money was not given to the bank. And third, which I have seen very recently, some kind of fraudulent activity wherein the customers approach the bank. So the process is that the customer would basically gives a estimation as to the car value. So the estimate is given for the highest model, and when the bank, the customer actually buys the car, he buys the car for uh, uh, the lower model. So that margin money which is to be given by the customer, it also gets eroded. So this is some kind of a fraudulent or malpractice which we are now seeing happening on quite a number of cases. Then fraudulent fraud through requisition of checkbook. So plain paper used for requisition of checkbook in place of proper counterfoil. Customer email and mobile also modified before that. So this is something which we are now seeing. So non-financial modification in the customer account sometimes become very important, and we need to ensure that as a practice the bank is only modifying these emails and mobiles only on the specific request of the customer, signed request of the customer, and not only verbal requests. Then of course the signature of the customer got forged in the checkbook was obtained, and the checkbook was used for fund withdrawal. So this is something which we need to keep in mind. Then fraudulent return of security item. This is one of the I would not say of very recent origin, but of course this has been a challenge with over something like 10-15 years of the banking, wherein now every branch, every bank has a system of issuance of debit cards and ATM cards and pins to the customers at the time of account opening. Now, the difference between something which is inactivated, so a debit card may be there at the branch which is not linked to any account, and a debit card which is already linked to an account which is already funded and which is already activated by the customer. The difference is that the if you take out the debit card and you somehow get the pin also, you can easily do a fraud in the account. So this is one of those cases where there was it was a large branch where they had a person who was looking after all the inwards and outwards in terms of courier, and that person realized that in case the debit card is not delivered to the customer, it gets returned to the base branch, and after 2-3 days even the passwords or the pin comes of that debit card. So he started retaining their debit cards with him of certain customers, and when the pins used to arrive, he used to open the pins and do some kind of a shopping on the debit card. And this fraud got detected when a lot of customer complaints started coming at the branches of fraudulent transaction in their accounts. So that is why this control over these return security items, return deliverables, return ATM debit cards of the customers become very critical activity for the any branch audit. Then fraudulent misuse of office accounts. So these has been misuse of office account has been generally a very important part of any transaction wherein an insider was involved. So these office accounts, basically what happens is that these office accounts, nobody is actually looking at these office accounts in detail, because one, it has a lot of transactions of high value. So a lot of transactions of them are not even done at the branch level. So sometimes we fail to actually go through these transactions in detail. Even the bank manager or the branch management do not look at them closely, and they can be easily misused for the purpose of carrying on a fraudulent transaction, because they need some kind of an account, so it can be easily misused for that purpose. Very recently, one of my friends told me about a fraud which has happened in one of the banks, in which what they have done is basically, one of the fraudsters, what they have done is that the customer approached the bank for issuance of fixed deposits. Now what they did was they issued the fixed deposit receipt by hand. They did not print it through the system. They actually filled it by hand, signed it and stamped it and gave it to the customer. And the money which he gave was parked in some office account and then later on transferred to some relatives account of that officer, and it was basically used for some kind of an online lottery or something, or online gaming. So it's a huge fraud which they have recently discovered in one of the banks. So this misuse of office account can be really a concerning factor for any auditor and needs to be really looked into. Then fraudulent withdrawal after death of account holder. So account holder died on 1st September 2011, of which intimation received on 11th May 2012. Branch staff noticed cash withdrawal in account after date of death. On verification, it was noticed that the withdrawals were made through withdrawal forms using thumb impressions. On investigation, same was done by some relatives of deceased. Now, in case of thumb impressions, generally the bank would insist upon the presence of the customer to verify with some kind of an photo identity to verify the that the customer himself is coming for the cash withdrawal. So in this case, the cash withdrawals were done through thumb impressions after the death of the account holder. So in any case, it is sure that it must have been done by some other person, because a person who has died cannot visit the branch, of course, not in his body at least. So this was one of the cases where it was reported as a fraud. Then fraud by fraudulent account opening. So I think when I look from the concurrent audit perspective, I think I look at two areas very, very closely, which is one is KYC AML, and secondly is of course advances. So this is one of the two areas which is very, very prone to some kind of a fraudulent activity or disaster happening at the branch level, and which may fasten some kind of a problem for me as an auditor also. So one of the cases where fraudulent account opening was done in the name of some company by using forged KYC documents, and some high value DDs, 15 high value DDs were intercepted, which were meant for the original company, and it was intercepted and they were got cleared through this account. And then these funds were of course transferred by RTGS to some other bank accounts. And later on the company came to know about these fraudulent transaction, and then they reported this issue. And then there was the bank tried to trace out the fund, but ultimately the funds were transferred to some other account which were also open with forged KYC, and then ultimately it was resulting into some kind of a cash withdrawal. So this is one of the again very, very important area where now you see banks generally not only looking at the document, also looking at some kind of a visit to the office premises or some kind of verification which goes beyond only the documents. Then fraudulent cash withdrawal. So branch manager refused to issue computerized passbooks, and cash deposited in the system and passbook were entered manually. And next day, similar amount would be withdrawn from customer account by forging signature. This entry would not be made in the customer passbook. So two set of books he has created, one which is running in the accounting system of the bank, and one which is running in the customer's passbook. And now this officer would never take a leave, sir. Would never go out on a leave. He would never allow somebody to take his seat. So it becomes very important that in such cases, the rotation of staff duties becomes a very important point here. And even the RBI has now a circular which requires some kind of a mandatory leave to the bank employees, that they have to be on leave for some portion of time in a year. And during that time when they are on leave, they should not have any access to the systems of the bank. So this is one of the reasons through which such kind of frauds can be detected. Then we have fraud by kite flying operations. So kite flying operations is where there are no genuine transaction, but some kind of fraudulent documents are given to the bank to allow the borrower to avail some kind of a credit limit. So so there were two related entities who were misusing LC to avail bank finance. The LC were opened on the request of Mr. X for Mr. Y for purchase of seafoods. No goods were sold or brought, and parties enjoyed bank credit on unsecured basis. Last cross transaction were committed amount to a cycle rupees 100 crores. The LC issuing bank refused to pay, and LC discounting bank filed cases to recover the. So these kind of issues also we have seen in case of LCs also. Then fraud by loan in name of non-existent staff. So think of the person he created non-existent staff, obtained loans in the name of those non-existent staff. He even created a Form 16 staff ID cards. And this is one of the examples where business pressure to meet target resulted into somebody befooling the system. So here the important point was that the identity documents were not obtained of the customers of these non-existent employees, and nobody visited these staff at the office to verify their presence. And of course, the company disappeared, and when the default occurred, it was revealed that the staff are not actually even in existence person, so they were dummy employees. Then fraud by duplicate FDR. This happened again, I think, in Mumbai, wherein fake deposit receipts were issued. So there were FDs which were deposited by some large development authority, and on that there were fake deposit receipts were issued, and loans were obtained, and without depositor's consent, amounting to rupees around 252 crores. And then these funds were used for payment through payment orders without mention on names, but with only the account numbers of the fraudsters. So from account number, you can't actually judge to whom the payment is going. Later, funds were received for new FDs were used to scale off the loans and issue receipt without entering the savings system. So something which was I was speaking about. So receipts getting issued to the customer feels the FD has been created into the system, and the funds were never actually transferred to the FD, and they were actually used for squaring off these earlier loans which these fraudster has done, and circular transaction in a lot of accounts were done. Then again, this is through duplicate FDR, and I think one of the last area we are going to discuss today, then because my time is getting over and I have to hand over the dice, and even I want to listen to Soma Shekharji, which I find, which is of course he is one of the very learned person on any areas relating to banking. So last point which I wanted to discuss with you is basically in relation to duplicate deposit receipts were issued by for two FDR issued in favor of executive engineer Korean request of the customer. So generally in case of these contracts, contractors get these third party FDs made in name of the executive engineer, which are offered to them as security. So similar two FDs were made, and later on the customer approached the bank saying that they have lost the original receipts before depositing it with the engineer itself, and requested them to issue duplicate FDs against them. And the bank agreed to do it. And later on, after some time, they came back with duplicate receipts which were issued, saying that they have not got the contract and they need to cancel the FDs and return the amount to them, which was done by the bank. And later, on the basis of the original receipt, the executive engineer made a claim on the bank. So the problem was the original receipts were actually deposited to the executive engineer, but duplicate receipts got issued by the bank, thinking that they were not so deposited. And of course, the FDs got cancelled on the basis of these duplicate receipts, which was not as per the process. So these were the issues which I wanted to discuss with you. There are two questions also which I can see which has come. So I'll discuss those questions and then hand over the dice to Mr. Soma Shekharji here. So it says in audit menu, we have standard points to review accounts, say slippage account limit not renewed during the audit. The reports menu are blocked or not accessible till completion of audit. How to ensure the availability of system reports. Passwords are not mandated for audited, and tailored menu for entering report alone is not made available. Please advise on the lines of data sharing for all critical reports within the time made available for audits. So, sir, Karunia ji, I think you are very relevant. And this is something which is actually a concern which everybody of us will be facing. Let me share with you, sir, a very small point here. I may not be able to give you a solution right now because this is a solution which the banks have to provide to the auditors. Because if they expect the auditors to find certain issues for them, they need to provide that support in terms of reporting and everything to the auditors. I'll give you an example for this. I remember I was doing a concurrent audit for one of public sector bank, a very large public sector bank. There, in one of the meetings which they called for all the concurrent auditors, there was a team of that bank sitting across the dais, and they were sharing their concern regarding non-checking of issues relating to wrong NRE credits in the NRE accounts. So ineligible NRE credits were done in the NRE accounts. And they was telling the audience that you are not checking it as an auditor, and we have been penalized by RBI for such ineligible credits to the NRE account. So I raised a point at that point of time, ki, sir, I have an issue here that are you providing me a report of all NRE credits done by my branch staff in a NRE account during as a audit month? If you are not providing me a report itself, how would I be able to even check those transactions? Because unless until I do 100% verification of all the vouchers otherwise, which is practically not possible, and even RBI does not ask you to do 100% verification, how would I be able to point out such kind of issues? Now, they said first in reaction was that you check for the accounts maintained at your branch. Yes, sir, but the account, my branch staff might have done a credit entry in an account maintained, say, in a branch in Mumbai, or maybe in Chennai, or maybe in Kolkata, or maybe in any other place across India. So are you we saying that we are only responsible for accounts maintained by my branch? So they then said, no, it is not the intention. And then they said that we'll give you a report, tailor-made report for all NRE credits done by your branch in a NRE account. Or this is something, I think your question is also pointing out to the same issue, that unless until that support is provided by the bank, we would also fail in our duty to actually be able to point out such kind of issues. They may be fraudulent, or they may be regulatory, or they may be otherwise any issue. So that kind of support is expected from the bank. On our part, I think what we need to do is to ask the bank also through email or through letter to provide those reports. Because just because we did not ask, later on if they come to us and tell us ki why you didn't point out something, then at that point of time, if we claim ki sir, because you did not provide us the report, we did not point out, then it looks like an excuse. But if you tell them beforehand that we need these reports, these support from you, so that we are able to perform our duty to the best of our ability, and I think that would do a value add to the banking industry also in terms of doing a better audit for them. And of course, later on, if such an issue arises at your branch, you can actually tell them that you did not provide me the support which even I requested from you, and therefore I may have missed out on pointing out any such discrepancy. Right? So this is, I think, answers your question on this issue. And the second question you have, I think that answers that.
Yes, sir.
Then second question you are asking whether existing gold loan given for 1 year can be settled on expiry of its sum out of fresh gold loan against the same security. In this case, only interest is served by loaning. So this is, I know, the typical issue which we see more of in case of gold loans, because somehow the policy is that there should be a in case of gold loans, there is a repayment period of say 1 year or 6 months, whatever, and it is a bullet repayment, that the repayment happens at one go. So a lot of times what we are seeing is, and this I pointed out during the course of deliberation also, that what you have stated is that what banks are doing against the same gold packet, they are refinancing it, taking the credit into the savings account of the customer or some office account, and using that credit for the repayment of the gold loan account, which is something which is not permissible. It is basically what we would consider as an evergreening of loan account. And of course, as an auditor, we need to step down and say that we will not accept such kind of a issue. And at one point of time, it results into a double financing also. That against a single gold packet, dual loans exist in the system. And very recently, I can tell you, sir, in case of our statutory audit, because you pointed out, I'm telling you, this year itself, we have pointed out 2 cases in one of the branches where they did the same thing, and the old gold loan also survived, was not adjusted, and the new gold loan was also given. So against a single loan, against a single jewel packet, not only dual financing was done, but the dual financing actually continued because of the failure of the bank to basically square off the old gold loan. So we have actually pointed out through our statutory audit report also such cases. Okay, so this is something which is not acceptable. I think I have answered both the questions. Any other
Yes,
questions?
sir. No, sir, there were 2 relevant questions which I have forwarded to you, and you have answered them both. I would like to thank you on the behalf of the Digital Accounting Board for beautifully delivering a topic on banking frauds and the case studies. Now we have another speaker among us, Somasekhar V. Sir, I, on the behalf of the board, welcome you here, sir, on the webinar. And I would like to also introduce you by reading your brief profile. He's a professional banker with 39 years of experience, having worked both at the leading PSU bank and a private sector bank in the areas of international trade finance, regulatory governance, risk management, and compliance. Sir has been a trainer in trade finance and foreign exchange operations, having conducted programs for FEDAI, NIBM, Institute of Chartered Accountants of India, banks across the country, etc., on various matters relating to trade finance, foreign exchange operations. He has trained over 15,000 plus chartered accountants on concurrent audit, 25,000 plus bankers on trade finance and foreign exchange, 100 plus corporates, apprising them on the latest developments in international trade and finance, 20 plus programs for the members at various chambers of commerce industry across the country, 8 plus B schools for the MBA finance students on international finance, management, treasury management, etc. Sir, आपको डिजिटल अकाउंटिंग बोर्ड की तरफ से हम यहाँ पे स्वागत करते हैं. We welcome you here, sir, and I hand over the mic to you for your deliberation.
Yeah, thank you, Mr. Kumar. So very happy to be associated with the Institute of Chartered Accountants, because since 2012 I have been conducting one program or the other for the members of the institute. And having said that, each program is an experience for me, because each program is a learning experience, because I get to know so many things from the CAs through various interactions, because it is where we can bring together the practice of banking, the law of banking, and the compliances in banking. So at the outset, I thank the Institute for sharing some of my experiences today on the subject, which is very sensitive in nature. So let me first share the screen. Okay. So I think my screen is visible to all.
Yes, sir, it is.
Okay. So here, whenever we talk about banking frauds, I'll be taking from the international scenario. So it's always a debatable point. When we talk about frauds, we generally also talk about money laundering. So it's always debatable whether fraud and money laundering are similar or whether they are connected. So here, whenever we talk about frauds, fraud is a deliberative, deceptive act. Fraud is a deliberately deceptive act wherein the fraudster generates cash and which he launders into. So that means there is a close relationship between the fraud and money laundering. That is, whatever he is deliberately doing, he has generated some cash out of the fraud he has done, and that needs to be channelized and that needs to be laundered. And here he is into money laundering. So whenever we say fraud and money laundering, whenever we talk about the banks, so we have the AML unit, we have the anti-fraud unit. So whenever we talk about the AML department is more concerned. They look into as to where did the money come from. So that is the area where AML is interested in. They look into as to where did the money come from. Whereas when we talk about the anti-fraud unit, their objective is to immediately protect the potentially significant losses that might accrue further. So here, when we say the relationship between fraud and money laundering, again, they're corollary to each other. So with the context, with this background, let me take you through some of the concerns, some of the areas where as a concurrent auditor, you need to look into. So when we talk about money laundering or whatever it is, or fraud, I'll just give you a brief background about the concerns expressed by FATF, the Financial Action Task Force. Financial Action Task Force is an intergovernmental organization with 39 members. So there are 37 member countries and 2 councils, the European Economic Council and the Gulf Cooperation Council, or the 2 council members. And there are 37 members, including India and China. So FATF is an intergovernmental organization with the objective of combating money laundering and terrorism financing. So in the plenary meeting in September 2022, which happened in FATF, so there they have expressed certain concerns, which is of very much importance to the audience today. So here, implementing customer due diligence. So there are 40 recommendations released by FATF. The Financial Action Task Force has 40 recommendations connected to combating money laundering, and they have 9 recommendations connected to combating terrorism financing. All the recommendations are very important. All the 40 recommendations emanating from FATF in combating money laundering, and all the 9 recommendations emanating from FATF in combating terrorism financing is very much important for all the countries. But as a banker or as chartered accountant auditing the banks, so here I will take you through some of the very important things. Implement customer due diligence. So one of the recommendations is the banks has to ensure implementing customer due diligence, including identity verification, record keeping, and also enhanced due diligence. So onboarding the customer becomes very important. So whenever you talk about a fraud or whenever you talk about a money laundering aspect, how the customer was onboarded by the bank, what were the KYC compliances that the bank looked into. So this becomes very important. And here, when we say onboarding the customer, there are 2 scenarios. Rather, there are 2 points here. A customer who is into domestic transactions is different from a customer who is into international financial transactions. So as a banker, when I onboard a customer, I look into whether this customer is doing domestic transactions or whether he is doing international financial transactions. So a person who is involved in international financial transactions, the onboarding by the bank should be more diligent in place, because the scope for frauds, the scope for money laundering is rampant in international financial transactions. What is the reason as to why the scope is rampant in international financial transactions? The complexities of the transactions, the various products involved in trade finance, the presence of multiple jurisdictions, the presence of multiple countries, multiple shipping lines, multiple shipping routes, so on and so forth. So this gives certain wavelength to the fraudster, to the money launderer, to take advantage of these situations. So as stakeholders in the system, as banks and chartered accountants, as banks and concurrent auditors, we need to ensure that whatever loopholes are there to be plugged in. And the first area of this is ensuring proper customer onboarding of the customers by the banks. And the second concern, which was expressed by FATF in the last September meeting, was that financial institutions and regulated entities. So when we say regulated entities, the banks, financial institutions and regulated entities, they may rely on third parties to conduct customer due diligence. But the condition is the ultimate responsibility for the customer due diligence remains with the financial institution or the regulated entity. So that means as bank, when I am outsourcing, doing a customer due diligence or conducting a enhanced due diligence, though the diligence is conducted by an outsourcing unit who is a third party, the bank, after having relied on such third parties, remains responsible. So this again is one of the concerns, one of the important points that FATF has brought in the recent meeting, in the last year's meeting. Now, NPOs and NGOs, non-profitable organizations, non-governmental organizations. So FATF tells all the countries to put legislated laws in place, because this is one area where FATF has experienced that money laundering is happening. The non-profitable organizations and the non-governmental organizations, they are used as conduit pipes. So when we talk about these two, in India, we have a legislative law, the Foreign Contribution Regulation Act, 1976. Latest amendment being September 2020. So this has put in place certain controls. And in today's context, any remittance coming into the country in the form of a foreign contribution or a donation, it should first hit the State Bank of India New Delhi main branch, basis which it can be transferred to the account holders of the accounts of societies or trusts maintained with other banks. So this is again one of the areas where FATF is concerned with. Now, other important thing, many of you may be aware, wire transfers, remittances coming into the country or remittances going out of the country. So globally, there are lakhs of remittances happening between the countries, between the banks. So FATF has recommended that wherever the wire transfer, we call MT103. Many of you may be aware of MT103. Wherever wire transfers, wherever MT103 is received by the bank from another bank globally, the wire transfer should contain accurate and meaningful originator details. So what does that mean? The main name of the remitter, the address of the remitter, the account number of the remitter. At the same time, the name of the beneficiary, the address of the beneficiary, and the account details of the beneficiary. So this should be complete, accurate, and meaningful. So FATF goes to the extent of adding one more point. Wherever the banks receive wire transfers, which does not contain accurate and meaningful originator details, based on the policy approved by the board of the bank can report the matter to Financial Intelligence Unit as a suspicious transaction. So that means there is a concern at the FATF level that wire transfers might be processed by the banks across the globe where it doesn't contain meaningful originator details or meaningful remitter beneficiary details or the remitter details. Again, alternative remittances. So most of you know, we have what is called as authorized dealer category 2, full-fledged money changers, authorized money changers, the OPGSPs, online payment gateway service providers, the exchange houses, the money transfer service scheme agents. So these are alternative remittances channels through which remittances flow into the countries. When I say countries, including global countries. So here FATF says that wherever the bank is onboarding or wherever the bank is entertaining remittances coming into the country or going out of the country through the alternative remittances channels, the legal entity, the person who is facilitating such inward remittances or outward remittances, he should be licensed or registered with the regulators, because this is one area again where money laundering is prone to. So this is the concern of FATF in the plenary meeting, and this is expressed through various countries. FATF expressed the concerns to various countries. Countries in turn escalate to the Financial Intelligence Unit, which is the nodal controlling agency, and Financial Intelligence Unit escalates this to the Reserve Bank of India, and Reserve Bank will be escalating this to the banks to put in place proper systems, proper controls, and proper procedures in place so that combating of money laundering and terrorism financing can be mitigated. So this is the background. As long as the customer who is onboarded by the bank is KYC compliant. So when we say KYC compliant, when we talk about a trade customer, who is involved in imports and exports, KYC compliance is nothing but the bank understanding the line of business of the client, the bank ensuring the track record of the client, and the bank ensuring the credit worthiness of the client. So line of business, track record, and credit worthiness. So when we say line of business, whether the customer who is onboarded by the bank is dealing in the same commodity in which he is involved in exports or imports. That is very important. We have come across many case studies where a customer is selling magazines on a roadside, but he has opened an import LC for importing electronic components. We have a customer who is dealing in old clothes, but he is telling the bank he is exporting diamonds. So this is what we mean by line of business. The line of business of the customer who is onboarded should not be in conflict with the goods in which he is dealing with for export or import. So that is what we mean by ensuring the line of business of the client. Second one is the track record. So when we say track record, in today's context, track record is how many entries are pending under EDPMS for having not received the payment. How many entries are pending under IRM, Inward Remittances Maintenance Record, for not exporting the goods. How many entries are pending under the IDPMS? Goods have come into the country, he has not yet made the payment. And how many entries are pending an ORM, Outward Remittances Maintenance Record? He has made the remittance to the overseas supplier, but he has not got the goods. So these are the 4 points. When we take track record, when we talk about track record, as a bank, when I'm onboarding the customer, or as a bank, when I'm monitoring the transactions of the customer, I need to understand how many entries are pending in EDPMS. He has exported the goods, he has not given the documents, or he has given the documents, but bill is not realized. Point number 2, he has received the advance remittances, IRM, towards exports, but he has not exported the goods. So how many entries are pending under IRM? Point number 3, he is an importer, he has imported the goods, but the payment is still outstanding. The entry in IDPMS is outstanding. And point number 4, he has made an outward remittance towards advance remittance for imports, but he has not received the goods. So this is one area where as concurrent auditors, we need to be very meticulous. In the sense, here, this will tell about the track record of the customer. So whether you are auditing a corporate, whether you are auditing the of accounts of a company, or when you are doing concurrent audit of a bank, these are the various points which you need to keep in mind, because this is one area where frauds can be arrested. This is one area where money laundering can be arrested. So that is what we mean to say track record of the customer. Then coming to creditworthiness. Creditworthiness is not the customer is availing credit facilities with the bank. That is not creditworthiness. Creditworthiness is what is the capacity of the exporter having received advance remittance in exporting the goods. Is the exporter capable? Is the exporter having the capacity to export the goods after having received the advance remittance? Or is the importer receiving the goods after having made the advance remittances? So these 3 points, these are the points which as a banker I need to look at. And as a concurrent auditor, when I'm looking into the transactions of the importers and the exporters, whether I'm auditing a company's accounts, company's books, or the bank's books, I need to be relying upon. So these are the areas where it should start from the ground level. And this starts with onboarding the customers. So recently, the Global Banking and Financial Review has made a very good statement. They say that simplified due diligence, an opportunity banks have been missing out on. So whenever I'm onboarding the customer, I can do a simplified due diligence. What does that mean? So when the customer opens a current account with the bank, telling that he is a trade customer, or he is an exporter or an importer, as a bank, can I not go into the IDPMS and see whether there are any entries pending for this customer with other banks? Or as an exporter, if I'm onboarding the customer, can I not go to EDPMS and see how many entries are outstanding for this customer with other banks? So this report says there are simplified due diligences which the bank can do it. But that opportunity is being missed out. An opportunity which the banks have been missing out on. So with this context, we will look into what are the areas of concern. So with the 2 slides giving the background of what is the importance of looking into or auditing the Forex transactions, I will just now take you through some of the basic areas. Of course, I don't have much slides. I have hardly 6 or 7 slides. I'll just take you through what are the areas of concern. Areas of concern, not only for the country, not only for the Reserve Bank of India, not only for RBI, but also for the concurrent auditors. So what are the areas which you need to concentrate upon when you are auditing, when you are doing a concurrent audit? Now, point number 1, inoperative and dormant accounts. So sometime back, I heard Lokesh telling about the inoperative and dormant accounts. But here I target FCRA accounts and NRE accounts. So banks, as you all know, any beneficiary receiving inward remittance into the country, being contributions or donations from the overseas donors, he need to get the approval, prior approval of the Ministry of Home Affairs, basis which the bank will be opening an account, either a savings bank account or a current account called FCRA account. So the scheme code used here is SBFCRA. So look out for inoperative accounts in the branches. So whenever you are doing concurrent audit, just take out a report of all the inoperative accounts that the bank has under FCRA. Because wherever there are operations in inoperative accounts or the dormant accounts, banks have put in place a policy on the delegation of powers. I've come across some banks not giving the delegation of powers to the branch heads. So this should be approved by, or this should be authorized by the circle head or the regional head, because this is one area where frauds can happen. The internal employees may take advantage of the inoperative FCRA accounts. The internal employees may take advantage of the dormant FCRA accounts. So wherever there are operations in the inoperative FCRA accounts or the inoperative dormant accounts, there is a specific policy laid down by the bank with the approval of the board as to who are the delegated powers, who has been given the delegated powers to authorize operations in these accounts. So whenever you are auditing the branch, either a C category branch or a B category branch, you need to ask for the policy. Banks cannot say that it cannot be disclosed, it cannot be shared with you. Banks are in order in sharing the policies. Only thing is, you cannot take a printout of this policy. You can go through the policy files and understand. So as per the delegated powers booklet, bank has permitted the concerned authorities to provide approvals for operations in inoperative accounts, mainly the FCRA account. So you have to ensure that the operations which are happening in these accounts during the course of your audit period are having necessary approvals from the respective authorities. Because once you start looking into this, the fraudsters, whether he is an internal fraudster or an external fraudster, he knows that there is some control there. Now coming to NRE accounts. So even there are lots of inoperative NRE accounts, dormant NRE accounts. Again here, the board's approved policy delegating authorities to permit operations in this account needs to be ensured. Whether the branch has ensured permitting operations in these accounts through the board approved policy. That again is one area where as concurrent auditor, you can look into on a random basis, and wherever you feel that something is missing there or some deficiency is observed, you can put your observations so that the observations, when it reaches the inspection team, the audit department, they will follow up with the branches to get it complied with or to get further clarifications on this. Now the next is foreign money register. Very, very important. There are certain branches which are authorized to handle foreign currency notes. That means not B category branches. B category branches are authorized to handle foreign currency notes. There are some branches other than B category branches who are authorized to handle foreign currency notes. So wherever you are auditing, whenever you are going for an audit for a C category branch, or rather a B category branch, wherever you come across branches handling foreign currency notes for their customers or for the foreign tourists, the branch should have a permission from the head office of the bank or the regional office of the bank, permitting the branch to handle encashment of currency notes. The central office or the regional office will also stipulate what is the retention limit. At the end of the day, how much foreign currency notes can be retained by the branches for disposal the next day. So that also needs to be clearly understood. So as a concurrent auditor, when you ask the branch, he may give you the copy of the approval given by the head office or the regional office, wherein you notice what is the retention limit. If suppose the approval is given to encash currency notes, but there is no retention limit permitted to the branch to retain the currency notes, the branch has to dispose of the currency notes to the authorized money changers or as per the arrangements permitted by the head office on the same day. And here, very important, any profit or loss on disposal should be adjusted only through the foreign money register. It's a regulatory guideline. And there were some instances where the internal employees of one of the branches, he started misusing this money. As a result of which, there were heavy losses incurred. And by the time the fraud came to notice, the employee had been absconding. So keep in mind, wherever you are auditing a branch, which is authorized to handle currency notes, encashment of currency notes, point number one, there should be an approval from the central office or the regional office for this branch to handle these transactions. And point number two, they'll be putting in place what is called as the retention limit, basis which the branch has to keep balances only within the retention limit. And very important, they have to maintain what is called as the double lock register in foreign currency. And as a concurrent auditor, you have to give the same treatment in checking these foreign currency notes as you check the rupee notes. Now come to the other one, FIRC registers, Foreign Inward Remittance Certificate. FIRC is a security item of the bank. Many of you are aware, from May 2016 onwards, issuance of FIRCs for export realization, export advance remittances is dispensed with. So banks are not permitted to issue physical FIRCs for advance remittances towards exports. In other words, wherever there is a remittance coming into the country towards advance remittance for exports, bank will be issuing e-FIRC, electronic FIRC. But FIRCs in physical can be issued for FDI transactions. Any company getting FDI, any company getting inward remittance, being FDI, the branch will be issuing what is called as the FIRC, physical FIRC on the security paper of the bank. And this is a security item. And all the branches should keep FIRC leaves, the security items, in double lock. And they have to maintain what is called as the register, inventory register. And some of the private sector banks, they have automated this because the register is maintained through the system. But many of the banks, they still keep manual registers. So when you audit the branches, the thing you have to ensure is, suppose if the register says there are 20 FIRC leaves, you have to ensure that there are 20 physical FIRC leaves available in the double lock. It is as good as currency note, because there are cases where some of the fraudsters has misused these FIRCs, blank FIRCs. They had input the details as per their convenience, and they had claimed incentives from the DGF, demonstrating to the authorities that they had received export realizations. So this is again one of the areas of concern. Now the third one is office accounts, monitoring office accounts. So whenever you are going to a B category branch, there are lots of office accounts in foreign currency. See, when I say office accounts, it's not that sundry liabilities in rupees, sundry assets in rupees, interest collected in rupees. I'm not talking about the rupee accounts. There are lots of office accounts similar to the rupee accounts with the branch. So many times, these office accounts in foreign currency are not looked into by any of the internal audit team. But as a concurrent auditor, just go through these office accounts, see whether there are any operations in these office accounts. This is one area where the fraudsters can take advantage of. Okay, like for example, SL, funds in transit. So most of the times you come across a general office account, SL, sundry liabilities, funds in transit, rupees. So you are checking the rupee amounts. All the employees or the branch officials, day in and day out, they tally these rupee accounts. But sometimes a blind eye is given towards foreign currency accounts. So there is a SL, FIT, SL, funds in transit, currency-wise, dollar, euros, sterling pounds. So maybe if one of the fraudsters take advantage of this account, he can debit one office account and credit another office account. And from that office account which is created, he can debit that office account and pass on the funds to some other account, thereby resulting in a fraud. Okay. So this is again one of the very important points. Now coming to trade, frequent extensions of export finance. So Reserve Bank of India permits extending export finance. An exporter having availed pre-shipment finance can seek extension with the bank for extending the pre-shipment finance, provided the reasons put forth by the exporter for not shipping the goods on time is acceptable to the banker. So banks have the discretion to permit extending an export finance from the original due date to the extended due date. So here, as a concurrent auditor, when you're auditing a B category branch, just go through the records and find out how many times or with who are the customers who have sought extension of export finance. Take out the files and understand as to what was the background, what was the reasons given by the exporter for extending the export finance, and whether the reasons put forth by the exporter based on the documentary evidences is acceptable to the bank. Bank has already extended, but as a concurrent auditor, you can just look into the background of the documents, just look into the papers and see whether you're convinced about this extension. If something is missing, or if you feel you're not happy, you're not satisfied with the bank having extended this, you can always put your observations. So this might also at a later date mitigate the frauds. Okay, now write-off of export bills. Any exporter having not realized the proceeds within the maximum 270 days from the date of shipment can seek extension, extending the period of realization. Despite extending the period of realization, if the export is not getting realized, now the exporter has come to a conclusion that these are hardcore entries and this cannot be realized at all. So whenever we talk about write-off, an exporter can self-write off. He can write off up to 10% of the exports realized in the last calendar year if he is a status holder exporter. If the exporter is other than a status holder exporter, he can write off on his own self up to 5% of the exports realized in the last calendar year. So here, whenever an exporter is writing off on his own, that means as a status holder exporter, he can write off up to 10% of the exports realized in the last calendar year. Or as a general exporter, he can write off up to 5% of the exports realized in the last calendar year. Now, an exporter has taken a decision to write off. Now, he submits the documents to the bank for taking on record and closing the entries in the EDPMS. Now, as a concurrent auditor, or presume, we'll take first the corporate side. You are the auditor of the company. Presume you are the chartered accountant for the company. Now, what is it that you need to look into to ensure the spirit of the guidelines? First, ensure whether the company has documented the delegation of powers for self-write-off, which is very, very important. As a company, the company should have documented, the company should have kept on record as to what is the system, who is authorized to write off the export bill at the company level. It is not that the desk level finance manager will do, not that the financial controller will do, or not that the MD will take on his own. There should be a document put in place. So as a chartered accountant of this company, or as a statutory auditor of this company, you have to ensure that there is a proper documentation on delegation of powers at the company level as to who should write off. Okay, that is one. Now, having said that, presume you are auditing the bank. You are doing concurrent audit of the bank. Now, post facto, that is, you will be doing the concurrent audit post the bills have been written off. Just take out the papers, understand as to what was the background under which the exporter has self-write-off, or understand the documents that has been submitted by the exporter demonstrating that the bill is not realized. Of course, there will be a CA certificate certifying on the export realizations in the last calendar year. There will be a CA certificate also wherein the chartered accountant will certify that he has surrendered all the incentives to the DGFT. Also, there is a certificate from the chartered accountant that the exporter has made adequate follow-up and the bill is still not payable. This will be there. But as a concurrent auditor, you need to understand whether the documents on the face of the documents, whether you are satisfied about the bank having taken the decision to write off the export bill. Because writing off of export bill, it's not only the exporter booking losses in his books of accounts, but the country is deprived of receiving the precious foreign exchange into the country. At least there were some cases where the exporters have written off the export bills with the banks in India, but they had asked the buyers to park the funds overseas. On one hand, they have instructed the overseas buyers to park the funds in some other locations. And on the other hand, they have represented to the bank that the follow-up has come to a dead end and they have written off. They have booked losses in their books of accounts. So this is one area where a concern is expressed. Now come to the next point, delayed import payments. As per the regulatory guidelines, as per the Foreign Exchange Management Act, any importer having imported raw materials should settle the payment within 6 months from the date of shipment of goods. And any importer who has imported capital goods, he has to settle the payment within 3 years from the date of shipment. But FEMA regulations permit delayed import payments. Any importer having not paid the import payment, any importer having not settled the import payment within the 6 months from the date of shipment in case of raw materials, or within 3 years from the date of capital goods, the importer mainly, see, this regulation talks mainly about the raw materials. Wherever the settlement is not done within 180 days, the importer can delay the payment subject to the delayed period not exceeding 3 years from the date of shipment. And if any interest component is involved to be paid to the overseas supplier, the interest should not exceed the alternate reference rate plus 300 basis points. I repeat, any importer who has not settled the payment within 180 days from the date of shipment, delayed payment is permitted by the AD bank, provided the delayed payment does not exceed 3 years from the date of bill of lading, and if any interest is demanded from the overseas by the overseas supplier for the delayed payment, the interest should not exceed alternate reference rate plus 300 basis points. Of course, subject to the bank agreeing, subject to the bank satisfying about the reasons put forth by the importer. Now, this is one area where there can be misuse of the facility. So when you're auditing a B category branch, you can take out a report. The branch can give you a report as to what are the delayed import payments during the period of audit. Now take out the back papers on a random basis. Suppose if there are 10 bills where delayed payment was there, take out some 2 bills or 3 bills on a random basis based on the threshold amounts. Check the documents. Find out what all the documents the customer has given for delayed payment, supported by the documentary evidences from the overseas supplier, and see whether the bank has taken a judicious call in permitting delayed import payments. So this is very important because generally, wherever the transactions are happening between the payment and between the parent and the subsidiary, an MNC parent having sent the goods to the subsidiary in India, sometimes there are chances that they may get accommodated. As and when they require the payment, they may call for the payment. So to ensure that such type of customers do not misuse the regulatory provisions, concurrent auditor can look into and see whether he can comment on the papers given by the customers and the decision taken at the bank level. Now coming to transactions with wholly owned subsidiaries and joint ventures. Of course, today, the concept of wholly owned subsidiary or the joint venture, they have been renamed as foreign entity. So earlier, prior to August 2022, we had wholly owned subsidiary and a joint venture. But today they are now renamed as foreign entities. Transactions with foreign entities. An Indian company, Indian party having invested abroad. And if they have trade transactions with the overseas entity, here we need to look into what is the documentary evidences. So as a bank, as a person auditing, I should be satisfied about whether the transactions are in tune with the regulatory guidelines. So this again might be resulting in accommodating the overseas parent or accommodating the overseas subsidiary. Now coming to the last one, which is a concern for all of us, because when we talk about exports, the support is there under the ADPMS, Export Data Processing and Monitoring System. When we talk about imports, there's a support under IDPMS, Import Data Processing and Monitoring System. So export of goods, export of software is supported under EDPMS, and import of services is supported under IDPMS. But import of goods. Import of goods is supported under IDPMS. Export of goods and export of software is supported under EDPMS. Then there's a gray area called services, whether your customer is into export of service or whether your customer is into import of service, or rather whether your client is a service importer or a service exporter. So this is again one area of concern for the banks as well as for the regulators. So here, I'll just give you a snapshot of the concept. Any exporter who is into export of services, he has to ensure that whatever service he is rendering is recognized under the Ministry of Commerce Foreign Trade Policy. So Chapter 3 of the Handbook of Procedures, Appendix 3D, D for Delhi. Appendix 3D, under the import trade, under the foreign trade policy, they narrate 46 services under 14 sectors. They have identified 46 services under 14 sectors which are eligible to be exported or to be imported. So as a client, when I'm into export of service, as a customer, when I'm into export of service, I should ensure that my export of service, the category of my services, are falling well within the 46 services identified by the Ministry of Commerce under Chapter 3, Appendix 3D. Now, there is one more appendix called Appendix 3E, E for elephant. So under Appendix 3E, the Ministry of Finance provides who are the customers under services who are eligible for incentives. So these two are the things which I need to keep in mind when I'm into export of service or import of service. So now coming to documents, what is the documents that I need to look into? As an exporter of service, I have to get registered with the Service Export Promotion Council or the FIEO, Federation of Indian Exporters Organization, and obtain what is called as the registration cum membership certificate. And wherever as an exporter I am eligible for incentives, it is mandatory that I should obtain the Importers Exporters Code certificate. So point number 1, when I'm into export of service, I have to get registered with the Service Export Promotion Council, depending on what is the nature of service I'm rendering. Engineering Promotions Council. So depending on what is the nature of service I am rendering, I have to register with the respective Service Export Promotion Council and get the registration cum membership certificate. Or I can even get a registration cum membership certificate from the FIEO, Federation of Indian Exporters Organization. Now, as an exporter, if I'm eligible for incentives as per Appendix 3E, as per the foreign trade policy, if I'm eligible for incentives under Appendix 3E, I have to invariably obtain the Importers Exporters Code certificate from the DGFT. Otherwise, I will not be getting incentives from the DGFT. Now come to import of services. So wherever I'm an importer or wherever your client is an importer and wherever he is importing service, he has already paid the money, advance remittance. Now he is getting import of services. So all the regulatory guidelines applicable to import of goods is also equally applicable to import of services. But the only difference is in case of import of goods, the IDPMS support is there. In case of import of service, there is no support under IDPMS. Then what is it that I need to look into? As a concurrent auditor, whenever you are auditing a B category branch, where you have transactions relating to import of services, which are outstanding. So any importer who has made an advance remittance towards import of service, he has to ensure that he receives the service within the 6 months' time from the date he makes the remittance. And what is the guarantee that he has received the remittance service? There are two things. A chartered accountant certificate. The importer who has already made an advance remittance towards service and he has received the service from the overseas service provider, the chartered accountant has to certify that the importer has received the service and the import is complete. Now, point number 2, which is very important, the importer has to send a letter to the customs within whose jurisdiction the importer's registered office is there. The importer has to send a letter to the customs that I made an advance remittance of so-and-so amount. I got the service rendered by the overseas service provider. This is the evidence, a CA certificate, as well as the invoice drawn on the overseas service provider, along with Form 15CA, 15CB. And I have to send these details to the customs within whose jurisdiction my registered office is located. And I have to forward the copies of the letters sent to the customs along with the CA certificate to the bank, so that the bank will knock off the entry which is outstanding under advance remittances towards imports. So this is one gray area where there may be lapses or the fraudsters might be taking advantage of. So this is one control that banks are putting in place. Banks have already put in place. Some of the banks have automated this particular service export and the service import. But wherever you come across banks still running under manual follow-up, you can just check whether these processes are completed. In case if you feel there are certain lapses at the bank level or there are certain deficiencies, you can always comment in your audit report. Now, finally comes the nostro and the ostro reconciliation. This generally is the area at central office, wherever you are auditing the head office of the bank, the dealing room of the bank, the back office of the bank, the settlement section of the bank. So nostro, ostro reconciliation. So whenever we talk about nostro accounts, there are two things which are very important. As a concurrent auditor, you need to keep in mind. How many partial debits are outstanding? What does partial debit mean? How many debit transactions are outstanding? How many debit entries are outstanding in the bank's nostro account with the overseas bank? What does that mean? The bank's nostro account is debited, but there is no corresponding credit in India in the mirror account. So when the nostro account will get debited, whenever there is an outward remittance, when the bank is effecting an outward remittance, either towards imports or towards repayment of ECBs, or towards NRA repatriation, or towards ODI investment, or any other LRS remittances. So the bank is instructing the overseas nostro correspondent to debit their account and release the payment to the overseas beneficiary. So whenever the bank is giving debit instructions to the overseas nostro correspondent, bank has to ensure that they have received adequate rupee amount from the customer in India, and that has to be credited to the mirror account in India. I'll just give a small example. Say your client or my client or whoever client is making an outward remittance under LRS. He is remitting $50,000 and presume the rupee today is 80. $1 is 80 rupees. So now when the customer is giving instructions to the bank to remit $50,000 overseas, his account has to be debited today itself for the rupee equivalent. So $50,000 into 80 rupees, say 40 lakh rupees. Now the branch will debit 40 lakh rupees to the customer's account. And what they will do, they will credit to the mirror account of the nostro correspondent. So nostro accounts are replicated in India through the mirror channel. So the branch will debit the customer's account, and the centralized back office, they will credit the mirror account of the dollar account. So for this mirror account, mirror credit, this is called mirror credit in rupees and in foreign currency. Now, tomorrow morning, the dollar account gets debited. Today, when the bank is giving instructions to the overseas nostro correspondent will be debiting by end of the day. That is US time. He will be debiting by 7 o'clock or 8 o'clock. Now, when the nostro correspondent debits our account, our dollar account for $50,000, next day morning, there's a debit in my nostro account. So the reconciliation team, when they see the debit entry, they have to reconcile with the rupee credit that has come into the mirror account. And that is what we call as nostro reconciliations. So any debit to the nostro account should be reconciled on the same day, because I should have recovered rupees from the customer. And as a concurrent auditor, whenever you are auditing the back office of the bank, you have to watch whether there are entries pending in the nostro account. Account is already debited, but there is no mirror credit in the account. So that means there are serious concerns. Because unless the bank gives authority to the nostro agent, he will not debit the account. Now, when you look into the transaction, there is no mirror entry in the books of India. Then what is this debit about? So there are cases where some of the fraudsters within the bank collided with outsiders and they started manipulating or operating the nostro accounts without the proper underlying in place. So as a concurrent auditor, when you are looking into the nostro reconciliation, all debits in the nostro account should be corresponding credit should be there in the mirror accounts. And all credits in the nostro account should be having a corresponding mirror debit entries in the nostro account. So wherever you are seeing entries outstanding for longer period, wherever a debit entry in the nostro account is outstanding for longer period. So when I say longer period, in my experience, I would say longer period is more than 3 days, or maybe maximum more than 5 days. So wherever the debit entry is outstanding in my nostro account, beyond 5 days, that calls for investigation as to who is this debit? What is this debit? Who has given instructions to debit my nostro account? So this is one area which is prone to frauds. So these are the areas of concern. These are the areas of concern. Now I have the last two slides. The last two slides are very important in understanding the customers. So as a bank, I should understand who is my customer. As a chartered accountant, you should understand your client. Who is your client? Okay. So when we talk about understanding the customers, let us first talk about exporters and importers who are into export of goods and export of software, import of goods and import of software. So when we say understanding the customers, the first point which you need to keep in mind is the area under advance remittances. Advance remittances is one area where there may be scope for either money laundering or frauds happening. So any customer who is making an advance remittance for the import transaction, or any exporter receiving an advance remittance for export transaction, this needs to be monitored by the bank. And whenever as a concurrent auditor, you are auditing the B category branches, you can take out a report as to what are the entries outstanding at the branch level. That means the customer has received the inward remittance, but he has not yet exported the goods. So that entry is outstanding under IRM, Inward Remittances Maintenance Record, which is supported under EDPMS. Likewise, where a customer is an importer, he has already made the advance remittance, ORM, Outward Remittances Maintenance Record, but the entry is still outstanding in the registers. That means he has not yet got the goods into the country. So these are the two reports under advance remittances which you need to be taking out. So when you take out the reports, you will get who is the overseas counterpart. For an export transaction, the overseas counterpart is the overseas buyer who has made the advance remittance. For the import transactions, the overseas counterpart is the overseas supplier who has received the remittance. So just cross-check who is the overseas supplier or overseas buyer. Are they having any relationship with the exporters in India or importers in India? Whether they are sister concerns, whether they are joint ventures, whether they are wholly owned subsidiaries, whether they are group companies. So once you randomly check this, names of the suppliers, and check the exporters database in the account opening, you can just ascertain whether there is any accommodation involved. That means wherever the entries are outstanding, I'm not talking about daily transactions, wherever the entries are outstanding beyond 1 year. Why I say beyond 1 year? Any export transaction where the exporter has received remittance in advance, he has to ensure shipment of goods within a maximum of 1 year. So if he has not shipped the goods within the maximum of 1 year, this entry is outstanding under IRM. Likewise, in case of imports, any importer who has made advance remittance, who has remitted the remittance, advance remittance for imports, if he has not got the goods into the country within 6 months, the entry is outstanding under ORM, Outward Remittances Maintenance Record. So take out the report and see how many entries are pending under exports and under imports, advance remittances for more than 1 year. So as a concurrent auditor, you can have a threshold limit. Now I keep telling the concurrent auditors that there need not be any instruction by the bank that you should check these transactions. So as a concurrent auditor, you have a threshold limit. Say, for example, if you are auditing a very big branch, now you can put a threshold limit of $5 lakh and above. So wherever you are seeing outstanding entries more than $5 lakh, just go through the background papers and see whether there is any cause for concern, whether it's a advance remittance towards imports or advance remittance towards exports, which are outstanding beyond the stipulated period. So that gives you some wavelength to understand where exactly is the concern. So you can put your observations in the report so that the branch will follow up, the head office or the audit team will follow up with the branch and see that that is brought to a logical end. Now, next is open account system. Open account is nothing but direct dispatch of export documents. And in case of imports, we call direct import bills. That means the exporter has exported the goods and he has sent the original documents directly to the overseas buyer who has taken delivery of the goods and he has to make payment. That is open account. So as a concurrent auditor, when you're looking into the outstanding entries under open account, whether imports or exports, you need to look into the IDPMS entries in case of imports already happening, but payment is yet to make. In case of exports, exports have already happened, but payment is yet to be received. So here you can take out again a report from the system. Put in place some threshold limits. You can within yourself decide what should be the threshold limit. And if the branch is a big branch, say for imports, you are putting a limit of $2 lakh. For exports, you are putting a limit of $5 lakh. So wherever the import transaction is outstanding beyond $2 lakh, just on a random basis, check the back papers. And wherever an export transaction is outstanding more than $5 lakh, check the back papers on a random basis. And here you can identify or you can come across whether there are any frequent requests for extending the original due date, whether there are any requests for write-off of bills. So this is one area where as a concurrent auditor, you can add value to the audit that you're doing to the banks. Of course, banks have lots of sophisticated systems. Many of the private sector banks, they have automated these systems and they have very good threshold limits and very good alerts being generated. But as a concurrent auditor, you can add value to the transactions so that you can always point out these are the observations, these are the deficiencies in documents, and follow up with the customers so that this can be brought to a logical end. And again, another concern is merchanting trade transactions. There are lots of exporters and importers in the country who are involved in merchanting trade transactions. So whenever we talk about merchanting trade transactions, it's a very good model in international finance. In international trade, merchanting transaction is a very good model. There are lots of corporates across the globe who are flourishing on merchanting trade transactions, but they're having sophisticated systems. They're having adequate controls. They comply with the regulatory guidelines. But the fraudster can take advantage. Any person who wants to take advantage of the systems, he can do something wrong in merchanting trade transactions. So here, as a bank, whenever I'm onboarding a customer who is into merchanting trade transaction, I look into what is the constitution of the customer. Is he a public limited company? Is he a private limited company? Is he a LLP? Is he a partnership firm? Or is he a sole proprietorship firm? So here, just for your information, some of the banks do not handle merchanting trade transactions for sole proprietors and partnership firms. Some of the banks, they are not handling merchanting trade transactions where the customer is a sole proprietor, where the customer is a partnership firm, because they feel that because there is no much corporate governance, there is no code of conduct under these customers' constitutions, they feel it's risky to handle. So that's a very good, in fact, a very good thought from the bank side in handling merchanting trade transactions only for private limited companies and above. Now, again, tenor of the merchanting trade transaction. There are again banks who have put a restriction on the tenor. It should be completed within 4 months. Though the Reserve Bank of India permits merchanting trade transactions to be completed within 270 days, some of the banks, they put a control for the sole proprietor and partnership firms that you should get the entire transaction completed within a period of 4 months. And they also look into which countries, from which country import is happening, from which country export is happening, to which country export is happening. That means, say for example, as a merchanting trader in India, I am a private limited company. Now I am supplying goods from the supplier who is in Cyprus to the buyer who is in Mexico. So as a merchanting trade customer in India, I am supplying goods from a supplier who is in Cyprus and the buyer is in Mexico. So that means the country of import leg is Cyprus, the country of export leg is Mexico. So both are high jurisdictions. Both are countries which are very risky in nature. So I should understand, as a banker, I should understand, or I should have a policy in place whether I can refuse to handle these transactions. Because this is again one area where frauds are happening. Money laundering is happening. So these are the three concepts. Understanding the customers. When I'm onboarding the customers, I understand in relation to what is their profile. And as a concurrent auditor, when you're auditing the B category branch books, you can always take reports relating to outstanding entries in IDPMS, outstanding entries in ADPMS. Even you can take a report of overdue entries under merchanting trade transactions. So this will help to understand as to the health of the branch in terms of international trade transactions and any deficiencies you observe, any lacuna you have seen in handling these transactions, you can always put your observations in the reports. Now, import and export of services, I have already deliberated on this when I talked about the service part. So here again, whenever the bank is handling a transaction for export of service or import of service, bank needs to understand who is this customer. Is he a sole proprietor? Is he a partnership firm? If the customer is a sole proprietor or a partnership firm, who are the overseas counterparties? Okay. And here again, we can always, as a concurrent auditor, when you're auditing the import and export of services, transactions relating to import of services and export of services outstanding at the branch level, you can always call for the age-wise data. Let the KMP, the key managerial personnel of the company, say as to why these entries are outstanding, why these entries are outstanding for longer period. And as well as a bank also, I can put in place certain threshold for making outward remittances. So I have seen in one of the cases, one of the banks, whenever a customer is onboarded, whenever an exporter who is into export of services, or wherever an importer who is into import of services, if he is onboarded, for the first 3 months, the bank is not handling any foreign exchange transactions relating to export of service or import of service. So they say that I want to observe your profile. I want to observe your transactions. And even if the bank permits remittances towards imports or remittances towards exports, they're fixing a threshold limit. That means they're telling for the first quarter, first 3 months, I will not allow you to make an outward remittance beyond $25,000. That means the bank is putting a control on the outflow of foreign exchange, because the bank has to read the customer. The bank has to understand the customer. And once in the first 3 months, the transactions are going through without any issues involved, the bank can enhance the threshold limits. They can enhance the threshold limits. For the next 3 months, I'll permit you $50,000. So first 3 months, they permitted $25,000. Next 3 months, they'll permit $50,000. And after 6 months, they will again look into the reports, look into the history of the customer, and then they can permit as a regular customer. So this is what we mean to talk about as credit worthiness of the customer. So that's why I said when we talk about credit worthiness of the customer, it's not that whether the customer is credit client or a non-credit client. The capability of the clients in handling export transactions and import transactions. Now, the other area where we talk about the remittances is freight payments. So many of the customers who are into freight businesses, they come frequently to the banks for making freight payments. So here banks are supposed to track the bills of lading for which freight is due. So wherever the corporate is making freight payments, wherever the customer is making an outward remittance towards freight payments, he has to give the Form A2, FEMA declaration. He has to give the copies of the bills of lading for which freight is to be paid. And he also has to give the 15 CA and the 15 CB. Now, as a chartered accountant, when you are issuing 15 CA, 15 CB for such type of transactions, you have to ensure whether you are looking into the bills of lading, copies of the bills of lading. So why you have to look into the bill of lading? Because wherever the customer is remitting freight payment, wherever the corporate is making an outward remittance towards freight payment, which relates to freights that is declared in the bill of lading. So he has to necessarily have the copy of the bill of lading, which says freight to collect. Freight to collect means freight has to be paid. Wherever you come across bills of lading, where it says freight prepaid, there is no requirement for making the payment again. So you have to see the bills of lading, copies of the bills of lading, and see whether the freight amount is indicated on the bill of lading. And the total of all the freight amounts indicated in all the bills of lading will be the total amount that he has to make payment to the overseas freight agency. So that needs to be looked into. And today we have sophisticated platforms where you can even track the bills of lading, and even you can track the voyage of the vessel to ensure what is it that is happening. So this is again one of the areas where as a bank, I need to be alert. And as a concurrent auditor, when you're auditing, you need to be alert. And wherever you are issuing 15 CA, 15 CB relating to such type of remittances, you should ensure that the transaction is in existence. Okay. So now I will just give you a sense of fraud happening through commercial invoice. So this will be the last slide for today. Now here, 18th December, I'll just minimize the. Now 18th December, client received an email communication from the vendor containing copy of the invoice for GBP 3000, which was due for payment on 24th December. Client, say your client received an email communication from the overseas vendor. He has attached the copy of the invoice and he is reminding your client that the payment is due on 24th December for 3000 sterling pounds. Now the client is aware, your client is aware that he has to make a payment of 3000 sterling pounds. Because he is aware, he takes the reminder and he files in his files, telling that anyway, I am aware of this. Now on 23rd December, subsequently a second email communication comes. On 23rd December, your client receives again second email communication attaching the original email of 18th December. And here, the second mail, they're giving a new invoice. The sender is giving a new invoice for the same amount, for 3000 sterling pounds. And he's telling that since I have opened a new account with another bank, please send the 3000 sterling pounds to the new bank. He's providing new bank details. That means the new invoice, that is, he's sending the second mail, attaching the original mail, and he's sending a new invoice for the same amount, for 3000 sterling pounds, but he's mentioning the bank details which are new. So he's telling that since I have issues with my existing bank, I've changed the bank details. So he's giving the new bank details, but he's telling you have to pay 3000 sterling pounds. And this has come on 23rd December. Now on 14th December, 24th December, on 24th December, your client submits the request to the bank. He submits Form A1, FEMA declaration, and the invoice copy. And the bank, he requests the bank to make the payment to the new account details, to the new bank details. And the bank has made the payment for $3,000 to the new account of this customer with a different bank. Now on 28th December, that is after this payment has reached, on 28th December, your client gets again one more invoice. And this is for GBP 1,03,000. And he is asking for making payment for this particular invoice. Maybe the client is importing and this 1,03,000 GBP is towards imports, for the further imports. Okay, so your client has made the payment as similar to he has made the payment on 24th December to the new bank. Now here on 5th January, the vendor, the original vendor, the vendor calls up the client and informs that they have not received the payment for 3,000. And they also have not raised any invoice for GBP 1,03,000. So here, what is the concern? So here, this is nothing but a frauds through commercial invoice. So here, the concern is, just a second. So here, the concern is, see, on 18th December, when the original reminder came, it came from John Dio at 123abccompany.com. On 23rd December, when the second mail came, it came from John Dio at the rate 123abccompany.com. And the fraudster took comfort by telling your client, by informing your client that you pay only 3,000, he got comfort from your client. And since your client remitted $3,000, 3,000 sterling pounds to the new account, he again established certain comfort and he raised the invoice for GBP 1,03,000 as if it was raised from the original vendor, and he snatched away this 1,03,000. So here the lessons are, I'll just go through the report, the study report. Now, COVID-19 pandemic has increased the risk of invoice frauds because of online transactions, and the accounts payable staff are working at isolation. So most of us are aware that even today, many of the companies are under hybrid mode. Because staff were working in isolation, the invoice frauds, the fraudsters took advantage of, and did frauds through invoices, raising invoices. Now there's a report by Europol. Europol is one of the EU's law enforcement agency on cybercrime frauds during the COVID period. So the report says 81% of the firms were targets in the area of invoice frauds through duplicate invoices, multiple invoices, to extract monies from companies with vulnerabilities in their accounts payable processes. See, many of you are aware, prior to COVID, globally, many of the companies were under manual processes. And because of the vulnerabilities in their accounts payable processes, fraudsters took advantage of that. So the report says, the report is from Europol, which is law enforcement agency in European Union. So the report says 81% of the firms were targets in the area of invoice frauds because they took advantage of the vulnerabilities in the accounts payable systems of the company. Now, red flags, companies with different addresses. PwC has conducted a survey called the Global Economic Crime and Fraud Survey 2020. So in this survey, they have established that companies with different addresses, companies with different locations. So here, the fraudsters first tried with low amounts, like the one you saw in the previous case. He first told the client, remit 3000 GBP. So fraudsters will try first with low amounts. And once they establish the comfort, then they go for higher amounts. Because approval for processing becomes easier as the accounts are very low, as the amounts are very low. So this is a report based on the PwC survey conducted through the Global Economic Crime and Fraud Survey. Now, point number 3, 39% of the invoice frauds. So again, the Law Enforcement Agency of European Union have brought out a report that 39% of the invoice frauds were through external perpetrators, whereas 37% of the invoice frauds were through internal perpetrators. So this is a report that has been published by the European Union Law Enforcement Agency. So they say that during the COVID period, 39% of the invoice frauds were through external perpetrators and 37% of the invoice frauds were through internal perpetrators. So I will come to the end of this program. We'll take some questions because I have some more slides, but I thought we'll take the questions so that the participants can share their queries, if any.
Yes, sir. Sir, there is one question which has come up.
Yeah.
Issue is regarding overvaluation in home loans. How can
overvaluation?
Home loans.
Home loans.
Yes, sir.
Sir, actually, I'm not familiar with home loans. Whatever is on the Forex transactions, I can clarify. But I'm not into domestic banking. That is one challenge for me.
Kanudia ji,
I think Lokesh will be able to take up this. I think Lokesh Gupta, if he is there, he will be able to help on this.
You can tell me the question, Kanudia ji. I'll help.
Yes, sir. So the question is, I'm sending you the question, but the question is, issue is regarding overvaluation in home loans. How can we examine that?
Sir, I'm very sorry because, see, actually, though I am a banker with 40 years experience, the weakness is I have experience only in trade finance and foreign exchange. I have not handled any of the branch banking.
Sir, I have forwarded this question to Lokesh, sir.
Okay.
So actually, see, Kanudia ji, I think the question is best answered by the fact that there would be a valuation report which the bank would have obtained for before the home loan is given. Of course, to a certain extent, the overvaluation cannot be checked by the auditors because they are not an expert on basically valuation of a property. But the good thing is, and what we do also, I can tell you practically, is that when we look at home loans and the valuation aspects of it, what we do is basically that now a lot of sites are there which actually can tell you the value of the property in the maybe on the same area or in the neighboring area, which can give you an idea as to the valuation of the property. So you can't be sure as to the exact valuation, but at least overvaluation of that more than 25% or 30% or 50%, you will be able to just through maybe searching online through these websites which are there, which are doing purchase sale online transaction on the property. So this can be a good tool for checking on the valuation aspects.
Yes, sir.
Yeah.
So, sir, there is one question for Somsekhar, sir. I have forwarded it to you. Sorry, I'm just forwarding it. There's one, just a second. Yes, sir. I have forwarded you the question. The question is, even before the real
Okay,
vendor
I will read. I will
Yes.
read. Even before the real vendor rang up the client, why did suspicion not arise immediately on receiving invoice of 1,03,000 as no goods would have been received? Isn't it safer to always deal in documents through bank as such frauds more frequent in direct billing? So here, see, the overseas fraudster, initially he told to pay 3,000 sterling pounds only. Why he wanted only 3,000 sterling pounds? He wanted to establish comfort with the client in India that you pay me the first bill. Subsequently, once he has paid this bill, maybe this customer is in regular relationship with the overseas supplier. So the overseas fraudster took advantage based on the transactions they have already done with the earlier supplier. He said, give me advance of 1,03,000 sterling pounds. I will send you the goods. And in fact, this particular case study relates to import of medicines. It's not in India, import of medicines in one of the countries. So one of the pharmaceutical companies, they were importing because of the COVID pandemic. They wanted some urgent medicines and all. So the fraudster took advantage of that. Of course, here as a bank, now I tell you as a bank, what is it that I am looking at? So here, many of the banks who are very good in technology, they have created the master database. They have created the master database of all the invoice numbers that are being generated by the customers. Suppose if this customer has sent invoice number 1, which was signed by or which was recorded, subsequently when he sends one more invoice with the change in the bank details, the system will throw up, telling that earlier invoice was to be created to Barclays Bank. Now you are telling the new invoice to be created to Lloyds Bank. So the system will identify the mistakes in the bank details and it will throw up an alert to the bank. Now the bank will contact the customer. Bank will say that earlier you were remitting to Barclays Bank. Now suddenly you are remitting to Lloyds Bank. So the customer will be alerted. So once customer is alerted, he'll make some more deep diving into the transaction and he may avoid some frauds later. So some of the banks have this system in place. It reads the invoice numbers of all the clients whenever a remittance is happening outside. And if the fraudster raises an invoice, which is details where the details are incorrect or something deficiency in the details, the system will not process that invoice. System will give a pop-up to the bank telling that there is something missing in this invoice. So that is some of the controls which are put in place. But nevertheless, hacksters, they go even beyond the controls put in place. Yes, please. Is it clear?
Yes, sir. It is absolutely clear. And I think there are no other questions to be taken.
Okay.
Yes, sir. So all the questions have been addressed.
But only one question on foreign exchange, on trade.
Yes, sir. There is one thing CA Gopal Subramaniam sir has written. Will a strong and robust compliance audit of Forex transaction and operations help the banks in avoiding frauds?
Come again.
Will a strong and robust compliance audit of Forex transactions and operations help the banks in avoiding frauds?
Yes, definitely. See, actually, that is what, wherever I'm presenting, I'm giving you some tips to the concurrent auditors. Though you are doing post facto, wherever there is a lacuna, wherever there is a lapse, or wherever there is a deficiency in the bank's systems and procedures, concurrent auditor can always suggest to the bank while he is submitting the report or discussing with the bankers. He can always tell that you can change your system like this, or you can put in place a control like this, because that is what we, in fact, in my past 40 years of experience, I've come across some of the concurrent auditors giving very good suggestions to the bank. They're telling, say, for example, merchanting trade transaction. would you to keep in place an Excel sheet to monitor because it is not supported under IDPMS. Merchanting trade transactions are not supported under IDPMS. So one of the concurrent auditors gave a suggestion. He even drew the Excel sheet and told, this is, you can maintain like this. So this is what we call value addition. So as concurrent auditors, you can always give certain inputs which are suggestive in nature so that the bank will definitely take it in the spirit of the suggestions given. And it's a coordinated effort. See, as a concurrent auditor, you are part of the bank. That is what I have been believing in. Because I have discussed throughout my service, I have been interacting with various concurrent auditors. As banks, we believe that they are part of banks because they are an extended arm. You are helping us to ensure that whatever wrong has happened or whatever deficiencies have been happening to bring it out. So definitely it will help.
There is one more question which has come up. We had forwarded the export documents through bank. Overseas customer had good contact with overseas bank. He took the documents without payment. What is the course of action we have to take in this case?
So here, I presume this is documents under collection basis. See, the exporter in India has exported the goods and he has given the documents to the bank in India. Now the bank in India has forwarded the documents to the overseas buyer's bank with the instructions to deliver the documents against payment. So this is called DP basis. When the bank is instructing the overseas bank, the bank in India is acting as a principal and they are giving instructions to the overseas agent to deliver the documents against payment. If the overseas buyer's bank has delivered the documents without payment, the buyer's bank can be contested under the URC regulations. We have what is called as the Uniform Rules for Collection Documents under International Chambers of Commerce. So this can be contested through that rules because he is not in order in delivering the documents without payment, when as a bank in India, I have instructed them to deliver the documents only with payment. So again, depends on what is the amount. And this can be even taken up with ICC. There is a committee at ICC which can resolve the disputes between the exporters in India and buyers overseas, or importers in India, suppliers overseas. So this can be taken. But the overseas bank has acted in negligence. Overseas bank has not acted according to the rules of Uniform Rules for Collection. URC 522, we talk.
Sir, one question has also come up. An importer without making payment to bank manages to clear the goods with the help of shipping agent who arranges deal to the custom authorities. In such cases, how an auditor can verify the same?
No, here, see, delivery order is issued by the bank. So here, if the importer has not made payment to the bank, but here the question says, with the help of shipping agent who arranges delivery order. Shipping agent can arrange delivery order only through the bank. And when the bank is issuing delivery order for the importer, they will insist for 100% cash margin, or they may insist for the indemnity from the importer, without which banks do not issue delivery orders. This is also called as bank release order. So once the bank has issued the delivery order, the shipping agent can go and take delivery of the goods on behalf. But here, without making payment, the bank will insist for either a indemnity, or they will earmark the balances in the customer's account, or they will earmark the drawing power wherever bank has sanctioned the limits to the party. But here, a shipping agent arranging delivery order, he cannot do it independently. Any bank which issues delivery order, they have to get indemnity from the importer. Only then they'll be issuing a delivery order. So here there is something missing in the question.
So,
missing in the sense, maybe the participant who has asked this question.
Yes, sir.
I want to emphasize that shipping agents cannot get delivery orders without the importer giving the indemnity. Without importer giving the indemnity.
Yes, sir. So I guess that will be all the questions have been addressed and taken. There is repetition of the question. The one you have already addressed before. And so there is one last question which we are going to take for today. That is, what precautions are to be taken when payments are made for import of software for license fee, technical fee, consultation charges?
Okay, so here it's a very good question. Whenever we talk about FEMA regulations, the FEMA regulations has not clearly explained as to what are the control documents that the bank needs to obtain when there is an import of service, either for license fee, technical fee, consultation charges, whatever it is. But as a bank, what we do is we take the copy of the master agreement, which is entered into between the client in India and the overseas service provider or the person who is providing consultation. We also take the chartered accountant certificate. And very important, whenever we say remittances towards license fee or the technical fee, there's a master agreement. There's a master agreement containing the terms and conditions, which is executed by the overseas counterpart with the importer in India. So that we take. And if the amount is very big, if the amount is big amount, we also take an opinion report on the overseas counterpart. That again is one. And very important, as an importer, he has to write to the customs. And as a bank, I insist whether he has written a letter to the customs, informing the customs that the license fee he remitted or the technical fee he remitted, he has already got the service completed by the overseas service provider. So when we say what precautions, as a bank, I take opinion report on the overseas counterpart, depending on the amount. I will see who is my customer. When I told some time back, understanding my customer who is into service imports. If this particular customer is a sole proprietor, I may not handle the transaction. If the customer is a private limited company, I may put a threshold limit. I will say him that I will not remit more than $10,000 or $20,000. So like that, I'll be taking precautions. Apart from obtaining the master agreement or the license agreement or the consultancy agreement. And I also will take what is called as the CA certificate to just demonstrate to the regulator tomorrow, in case if there are any issues, I will say that the import of service is complete. The CA has already certified that the import of service is complete. It's a very vague, very gray area. Bank needs to be very careful in such remittances. Maybe I will put threshold limits in place and I will ensure that we will make remittances only for small amounts or customers who are reputed in this area of business.
Yes, sir, that was the last question we have for today. And we are already running out of time. So I think we are able to conclude now, sir, with your permission.
Okay. So thank you very much.
Sir,
you sit in Delhi or Mumbai?
No, sir, I sit in Raipur.
Oh, Raipur. Okay.
Chartered in Raipur.
Okay, very good. So thank you for providing me an opportunity and thanks for the questions from the participants who raised these questions.
Yes, sir. So, sir, on the behalf of Digital Accounting Board, I would like to thank all the participants and eminent faculties among us today who has delivered, I think, a fabulous session on banking frauds, and the case studies were really helpful. Firstly, first speaker, Lokesh Gupta, sir. Our second speaker of the session, Somasekhar, sir. We had a pleasure hearing you today, and you have delivered, I think, one of the best I have heard topics on banking frauds. That was really insightful and helpful for all the participants present today. We thank you, we very much thank you, sir, for attending our program and graciously giving your presence today. Thank you all the participants for attending the webinar. Digital Accounting Board thanks everybody present today. Thank you.
Thank you, Lokesh ji.